Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So in this session, we are going to discuss costing RTP for the attempt September 2024, right? So before we get started with the actual RTP discussion, so I have three things to share with you before we get started. The first thing is about the prerequisite, right? So before you attend this session, I assume that you have at least studied the entire subject once, right? Maybe from my regular lectures or revision lectures or by self-study or from any other faculty, that doesn't matter. At least once you have an idea about the subject, that's when this RTP discussion is going to be effective for you, right? Number two, whatever time that you are spending here along with me for this RTP discussion, I want this to be absolutely productive in such a way that whatever time that we are spending here, it needs to be revisited, if at all when you're revisiting it the day before your exam, it should be completed in a span of just 15 to 20 minutes max. Now sir, how would we do that? This is where the power of note taking comes in, and I will tell you how do you take notes during this discussion. This is what I generally follow in my regular lectures as well, but I'll just give you a taste of what it is right now and prove it in front of you that whatever lengthy discussion that we are going to make here, the entire RTP can be revisited in about 15 to 20 minutes the day before your exam, because what is not revised is as good as not done. So the day before your exam, you should be able to recapitulate the entire thing. Today, whatever you prepare is not for the exam, it's for the day before your exam, because unless and until it gets revisited, you will not be able to recollect in the exam hall, right? So I will also be walking you through as to how do you take notes, right? With respect to even this RTP discussion, I will just walk you through that. And number three, I want you guys to participate throughout the session. If I ask you a question, do not worry whether it's right or wrong. That is not the criteria, right? So here, please participate, because only when you give, you will get it, right? So this is what I keep telling. Learn like a child, but behave like a professional. But what we do? So when we learn, we want to behave like professional. So it's say, no, I will not answer. Nothing of that sort. Bring that child mode right now. It's absolutely fine. And just see the magic, right? It will never go out of your mind. Clear with this, guys. Now I have this, this is something that I generally follow in my regular lectures as well. I call this as library of adjustments. I call this as library of adjustments, right? So I'm sure some of you might already know this, even those who have not attended my lectures, who Karthik said, we all are students of the legend MPV himself. So this is something that we learnt from MP Vijay Kumar sir. He's not teaching anymore, but we all had the privilege of learning from him, and we are just passing on the legacy to you. Now, what this library of adjustment does is that this is where the magic happens. You will be able to recapitulate whatever we have learned in detail in a span of 15 to 20 minutes, as I was telling you right now. This can be done provided you maintain this library of adjustments. So what is this? Now in our RTP, broadly there are 4 types of questions, right? What are the 4 types of questions you've got? One is case study based MCQs, right? Then you have standalone MCQs. Standalone MCQs is that one small question will be given and 4 choices, right? Case study based is one case study will be given, out of which generally they ask you 5 questions. Each question carries 2 marks, 5 into 2, 10 mark. Clear with this? So case study based MCQs, standalone MCQs. Then you have descriptive question. As you all know, this is proper numerical solving, sum solving, and apart from this, finally you have theory questions. Clear with this, guys, right? So this is going to be the agenda for today's session. Basically, this is nothing but this is what is available in your RTP as well. Now, this library of adjustment, for the purpose of RTP, I want you guys to take your notebooks right now, and just prepare one small template. The template is going to be question number, type, chapter, and concept. This is all I want you to do. Question number, type, chapter, and concept, right? Please open your notebooks right now. Even the ones who are going to attend it online, like on YouTube later on, please do it as if you are sitting in a classroom, right? This is going to be a game changer, trust me guys. Yes, have this as and when we complete a question, we will come and we will fill up the scoreboard here. Clear with this? So that once we finish this entire RTP, if you look back, you will know in which sum, which chapter, which concept, which type we did. Are you clear with this? Yes, sir. Right guys, this will help you to recollect the entire RTP the day before your exam. Are you clear with this? It is not like just for the sake we do and we leave it. No, you are investing your time right now. It should be absolutely worth it. There's a saying, spend your time like how a miser spends his money. Miser na kanjam, right? Spend your time like how a miser spends his money. Students, you guys, time is like its essence. It's a limiting factor in marginal costing terms, right? So when there is a limiting factor, how do you take the decision? Contribution per limiting factor. Here it's going to be mark per minute of time that you spend. That is how you need to spend. Clear with this guys, right? So this is something that I want to tell you all. And number two, as I was telling, please participate. Detailed solutions you need not do. It's okay. More important than the actual solution. The solutions are also there in the RTP. Then why are you here? It is the process that matters the most. Question is there. Solution is also there. Then why are we doing this discussion at all? For that matter, why do you even attend lectures? The entire study material has question and solution. It's not about question and solution. Starting point and destination are always there. It is how you arrive at the solution. The process is all that matters, and that is what I'm going to walk you through right now. Clear with this guys, clear with this. So what you can do is, when we are starting the numerical problems, basically right from the first question itself, have your calculators, right? Whenever I'm asking a question, please answer back, right? Participate in the classroom discussion, even if it is going to be as simple as 1 + 1, 2, it's okay, right? You just participate and you just see how the answer comes. And at times, even if you are getting a wrong answer, don't get bogged down by it, right? There might be a student next to you who would have got the right answer. That's okay. That's okay. You can make a mistake in the classroom today. This mistake should not be done in the exam. That's the reason why you are actually sitting here today. Are you guys clear with this? Yes? So are we clear on the ground rules here? Yes. Now shall we get started guys? Yes, sir. Perfect. So now let's get started. Let's get started. So please take your RTP. Please take your RTP. So whatever in your mobile phone, whatever it is, you can just use it. Anyways, I'll be displaying it here, so you can also read it from here. So what I will do here is, so there are two case study based MCQs in this attempt's RTP, and in this attempt's RTP, there are a few really good sums starting from the very first question. It's a good sum, and this sum, this exact variety, certain adjustments are there that are not there in the study material, or that are not there even in the previous RTPs that I've seen. So if you notice the trend, every attempt institute is actually keeping a few adjustments that are slightly out of the box, right? And if you also notice even more further, these adjustments may not be coming as such in that respective attempts, but they are twisting it lightly and keeping it more or less the same adjustment appears in your exam. So right now, your focus is going to reward you with about 15 to 20 marks in the upcoming attempt. Clear with this guys, right? Now, one very common thing that I've heard from students is that, sir, case study based MCQs, when they say MCQ, 30 marks MCQ, 70 marks is going to be your descriptive portion that includes your theory as well. Sir, it looks nice to hear the 30 marks is MCQ, but when we start solving it is generally very time consuming. Have you also felt the same way? Yes, sir. Right. Now, there is actually a strategy to crack this, and I will prove it in front of you. What you should do is directly don't study the entire case study. Directly don't read the case study. Now, what you do is, case study is there, underlying there are 5 questions. At the end of the day, if you crack those 5 questions, you're going to get 10 marks. What you do is, you need not even read the case study first. Go read the question. Just give it a glance. And now when you start reading the case study, what happens is, you will look for these details in the case study. This will save a lot of time because you need not once again read it. If you read it, if you read the case study, then go to the question, once again you will come back and search for the same figures. Rather, at the time of first reading itself, if you have these details with you, now you are going to save a lot more time. Clear with this, guys? I will come to the exam preparation strategy as well in a separate session. But let me just tell you, this is how we are going to do it, and I will prove it in front of you. Clear with this, guys? So forget this. Let's go to the questions. What are they asking? What are they asking? If Axe Trader, I don't know Axe Trader and all that, fine, that's okay. If Axe Traders pays a supplier within 30 days of purchase, what is the total amount of cash discount received from the supplier? How it is treated to calculate material cost? Now, so clearly there is something related to cash discount, and this question has something to do with valuing your material cost. To this extent you can make out? Yes. Next, what will be the amount of other expenses and how it is treated in material cost? Some adjustment must be there regarding that. What is the amount of GST? How will it be treated? And the total material cost chargeable in the cost sheet. What is the number of good units? Good units means what? There must be some losses. Clear? You can make this out, right? Very simple and logical, right? Per unit. And what is the effective cost per unit of the materials received? This is what they have asked. Clear? Now you just go and read this case study. Axe Traders, an unregistered supplier under GST. First line itself, what are they saying? Unregistered supplier. This particular company is unregistered. Fine. Purchased materials from Y Limited, which is a registered supplier from GST. Y Limited is going to be their supplier from whom they are purchasing. Right? During the month of June 2024, Axe Traders had purchased a lot of 5,000 units on credit from Y Limited. The information related to the purchase are as follows. The listed price for one lot of 5,000 units are 2,50,000. So for 5,000 units, list price means what? Maybe the MRP. Okay, excluding taxes. This is their rate chart they have prepared. Trade discount is 10%. CGST, SGST, credit is available. Very important, right? 18% they have given the breakup 99. Okay, cash discount is 10%. Will be given only if the payment is made within 30 days. Toll tax paid is given. Freight and insurance, demurrage is given. Commission and brokerage on purchases. Amount deposited for returnable containers. What is this? If you see in the nearby shops and all, right? Any local shops, if you see, so they will be having this bottle Pepsi and all. That will be in a crate, right? So this crate they will give a deposit. Or why go to that extent? Water cans. You guys give a deposit, no? Right? 100 rupees deposit for that water can goes on in rotation, right? That is what he is saying. He deposited some amount for returnable container. Is that a cost? Is that a cost? He deposited some amount. Deposit is not a cost. Deposit is not a cost. It's not. It's a deposit. Clear with this? You will get back. Look at this. Amount of refund on returning the container, 20,000. So I deposited 30. I got back 20. The net of only 10K is going to be my cost. Clear with this, guys? Simple, logical. Next. Other expenses, 2% of total cost. Fine. Then a 20% shortage in the material on receipt is expected considering the nature of the raw material. The payment to the supplier was made within 21 days. Meaning what? Meaning what? He has paid within the net 30, right? Net 30 days, which means is he eligible for a cash discount? Yes, perfect. Yes. Now, before we get into the solutions, let me give you a background. First, what are the costs that can be considered as material cost? Now, any cost that is incurred to bring my material to my stores can be considered as a material cost. Agreeing with me on this? Yes, sir. Except what? Except what? Number one, if we are talking about taxes, GST, which is eligible for credit, correct? Now, that will not be a cost at all. It is ideally a current asset. I am paying to my supplier, right? And at the time when I am selling it, whatever is the outward liability, I can adjust this as a credit. It is a non-P&L item only. Are you clear with this, guys? Yes, right? Now, don't say, sir, we are sitting in group 2 directly. I don't know group 1. This is the writing on the wall. The assumption by the institute is that you at least know basics of GST, right? Now, I can understand. So directly we are only in group 2. Now, some students, if you feel like that, at least some basics is expected right now. Earlier it was at least they were confining only to composition scheme and all that. Now they have gone one step further. So in this question you tell me, guys, what have they given? What have they given? This GST credit available, will it be a cost or not? No. Will it be a cost or not? No. Yes? No. No. Yes? No. No. Yes. It will be a cost. Read the first line. This guy is unregistered. He cannot collect GST when he is selling the goods. So whatever GST is paid is going to be his cost. This is institute for you. Guys, little observation, clear with this. Are you all able to understand now? Yes, when I'm selling this, convert it into FG and selling it, can I charge GST from my supplier? I mean from my customer? No. Why? Because I'm unregistered. Which means obviously whatever GST that I pay, they are saying, sir, then what is this credit available? Generally it is available. Generally it is available. You are unregistered. If you register, it is available. That's what they are saying. They are not saying this GST was paid under composition scheme. Are you clear with this? Yes? Okay, so that is how it is. Guys, are you clear with this? Number one. Number two, another mistake which people generally make, demurrage. What do you mean by demurrage? Now, this is more of a penalty in nature. Basically, let us say, the goods were moving in a lorry, right, from the supplier's location to my location. In between, what happened? There was some check post or this police officers. They had just stopped the vehicle and they had retained or detained it for some 5-6 days. And then after everything was over, documents were checked. They left it. Now, what happened? We are not talking about what fine they paid to the government. No. This lorry operator, was it his mistake? No. But his lorry was actually being detained for 5 days. He couldn't use it for his business. He will charge demurrage from the customer. So, our business has paid some demurrage. You tell me, is it something that generally happens in the course of business, or is it non-operating item? Non-operating. All non-operating items are excluded from our subject itself. Are you clear with this? Not just material cost. It will not even impact your cost sheet. Are you clear with this? Yes. Guys, you're all clear with this, yes, right? That is one more adjustment in this question. These are broadly the two adjustments. And of course, one more thing. What about cash discount? What about cash discount? Cash discount, should I consider it in my material costs? Number one. Number two, should I consider it in my cost sheet? No. Why no? It's not a type of sale. It is a financing item. Basically, why do you get a cash discount? You are paying it little early. Have you heard of this time value of money concept? Yes, since you are paying him early, the amount of working capital blocked for your supplier is actually getting released now. So he is actually passing on the benefit to you by way of a discount. It's actually financing an item. It is not considered in our subject itself. Are you clear with this? Yes. Are you all clear with this? However, trade discount is in the very ordinary course of business. It's an operating item only. Fine, guys. And finally, there is one small adjustment as well. We will see what it is. Clear with this, guys, right? And one more thing that I want to tell you all. Now, in this case, they have mentioned a 20% shortage in material on receipt is expected considering the nature of raw material. Now, losses, treatment of losses, there are two types of losses, normal and abnormal. In this case, it's a normal loss or an abnormal loss. Why is it called a normal loss? They have given the word expected. Why? Because it's an inherent nature of this particular raw material. It is avoidable or unavoidable? It is unavoidable. You can't do anything. So basically, let us say there is a vendor in Hyderabad and we are in Chennai, right? And let us say I paid 1,000 rupees, right? And I bought, example, 100 liters of petrol. Just an example, 10 rupees per liter is never possible, not even in your dream, right? So this is what it is. So what happened was I placed an order for 100 liters of petrol by paying how much? 1,000 rupees. But I know for sure when the lorry comes to Chennai, my place, I know for sure that I will receive only how much? Let us say 80 liters. Just an example, right? So when I actually calculate the effective cost per liter, I will say I know that I am going to pay 1,000 and I know that I am going to receive only 80 liters. Are you clear with this? Yes. So the effective cost is how much? Come on, calculate. 1,000 divided by 80. How much is this? 12.5 per liter. Are you clear with this? But actually seeing when I paid, the purchase price was only 10 per liter. What happened? Here it was 100 minus 20. This 20 was treated as a normal loss. And by the way, this is the basis of process costing. Right? Now what happens in this case is, so please listen to the statement, normal loss is not valued separately, but its presence will inflate the per unit cost of the expected good units, not the good units, expected good units. There's a small difference, right? So in this case, instead of 10 rupees per liter, it became 12.5. Why? Because the cost incurred in respect of 100 liters is now being shared only by 80 liters. Are you clear with this, guys? So that's why in costing, any stock is always valued at normal cost, expected cost, not at actual cost. Are you clear with this? Here the numerator is what? How much I am expecting to incur. Denominator is what? How much I expecting to receive. Clear with this? Suppose I receive only 70. Still the calculation will only be this. Then what will I do? I will deal with this separately. I will say 70 is what I actually received. 10 is going to be over and above my expectations and abnormal loss. I will value it separately. Clear with this, guys? Clear with this, guys? Fine? Perfect. So this is the background to crack this particular question. Are you clear with this? In exam, it is not going to take this much time. Here I need to explain the concepts. That's why it is taking this much time. Now shall we get started with the solution? Yes, sir. Yes. Fine. Now look at this. Just participate, guys. Now look at this. So what was the first question here they asked? If Axe Limited pays the supplier within 30 days of purchase, then what is the total amount of cash discount received from the supplier and how is it treated to calculate your material cost? Number one, how is it treated? That we know. What? It is not at all considered for the purpose of calculating my material cost. Are you clear with this? So now, how are we going to go about with this? So it's going to be 2,50,000. 2,50,000 is going to be the listed price. Correct? Please have the question with you. So what's the listed price? 2,50,000. Less trade discount of 10%, 25,000. What's the taxable value here? 2,25,000. Add GST of 40,500. Now look at this. This is going to be the total amount payable to the supplier. How much is that? 2,65,500. Clear with this? Now the cash discount is going to be 10% on the taxable value. On GST and all discount is not there. Why? That month's return would have already been filed. Right? Now technically speaking, subsequently they can issue something called as a credit note and get it reversed. Let's not get too technical about GST here. Clear with this? So here the institute is expecting only to calculate the cash discount on the taxable value. Clear with this, guys? Clear with this, guys? Fine. So the net amount to be paid to the supplier is 2,43,000. Are you all clear with this? Fine. So in this case, so what have they asked for here? So it's going to be 22,500. That is the amount that needs to be paid to the, that's the amount of cash discount. Right? And how is it treated? They have mentioned it as it will not be deducted to arrive at the material cost. Ignore it completely. Clear with this? Why? The reason is it's a non-operating item, basically a financing item. Clear with this, guys? Yes. Now let's move on to the next one. So what was the next question? What will be the amount of other expenses and how is it treated in material cost? Now this is where once again an additional twist is there in this particular question. Now what have they given here, guys? Other expenses is how much? 2% of total cost. While computing the total cost, you should consider what? You should consider GST also. Yes, some people will ignore GST. Then if you ignore GST, then this particular step will be, the answer that you will get will be wrong, right? So you should compute all other costs, right? On that you will apply 2%, right? Yes, no. Other expenses is also a part of total costs. So what you do is 2 by 98 will be the calculation. Clear with this? Inclusive basis. This is like 10% on sales, 10% on cost. That reverse working needs to be done. Look at to what extent they have coined this question. Right? Okay, clear with this, guys? So that is what they have mentioned here. Listed price is going to be 2,50,000. They have mentioned the units also here. Why have they mentioned this? Because towards the end they have asked for the cost per unit, effective cost per unit. For that calculation here itself they have given the steps. Anyways, guys, all these steps are not required for your exam, right? But still they have presented it so that you will understand it. Less trade discount, so it's going to be 2,25,000. Add GST. GST is a cost for us. Clear with this? It's going to be 2,65,500. Now have the question. From this, toll tax is added. Is that a cost? Can it be considered as a material cost? Yes. Without paying toll tax, how can I actually bring my goods to my place? Are you clear with this? Then freight and insurance, absolutely. Without that, how can you bring your materials here? By the way, if they had mentioned freight inwards is always a part of material cost. Clear with this? Freight inwards is always a part of material cost. Next, commission and brokerage will also come in here. Demurrage charges should be ignored. Nowhere they have mentioned it. Please make a note somewhere. Demurrage should be ignored. It should be ignored because it's a non-operating item. Are you all clear with this? Maybe if you're having a notebook, from every sum, the key takings alone, you just scribble it in your own language. Clear with this, guys? Don't touch the library of adjustments that I will dictate. Right? Scribble somewhere. Question number 1, this was the issue. What are all the issues that I'm discussing? That alone you put it in your own language. That will do. Calculation wise, don't worry. You participate here. You anyways have the solution. Clear with this? The process is important. Clear with this, guys? Yes? Fine. Next. Another important aspect here is regarding the returnable containers. So the amount deposited was 30,000, but the amount that I got back was only 20,000. The difference between that pertaining to 10,000 rupees is the effective cost that I am incurring for the containers. Clear with this? So that is what they have mentioned here. The difference between the two of 10,000 has been mentioned. Now these are ideally all the other costs incurred other than the other expenses. Clear with this? Clear with this? Now what have they mentioned here? Other expenses is going to be 2% of the total cost. So technically speaking, this all other items plus this other expenses will give you the total cost. Correct, guys? So if this is 100, this needs to be 2. The all other items put together is going to be 98. Right? Reverse working. So now we have this figure with us. So this figure divided by 98 into 2, you reverse work and you arrive at it. Clear with this, guys? Yes? Are you all able to understand the calculations here? Right? And now you get this 3,40,000. So 3,14,000 rupees is what you actually incur to place an order for 5,000 units. I'm very clear on my wordings. Place an order. Right? But what happens right now? The story is not over yet. They are expecting a shortage of 20%. 20% on 5,000. How much is that? 1,000 units gone. Will you value it separately? No. Normal loss. So what you will do, I know that I'll have to incur 3,14,000 only to get an effective good units of 4,000. Clear with this? So technically speaking, the expected cost in the numerator is going to be 3,14,000. The expected good units I'm planning to receive is going to be 4,000. Divide the two, you get the cost per unit. Clear with this, guys? Clear with this, guys? Fine, right? Okay. Come back. Now let's finish it off. Now with this, the entire sum is sorted for you. Let's get started. What will be the total amount of other expenses? How is it treated? Now other expenses should form part of what? Material cost. Obviously, it's material related. Clear with this, guys? So now how much is that? We just calculated it. So 6280, it forms part of your material cost. So just go and tick whichever option. Look at this, option B. Clear with this, guys? Right? That's about it. Next one. What is the amount of GST? How will it be treated? GST we just calculated. How much is that? 40,500. How will it be treated? It's a part of your material cost. Reason. I am unregistered. Generally credit is available. The answer will change if I am registered. Guys, clear with this? Right? Excellent coining of question. Right? Look at this. So it's going to be what? 40,500, 4,500, right? Yeah, 40,500 added to material cost. Clear with this, guys? Right? The next one. What is the total amount of material cost chargeable in the cost sheet? 3,14,000. We saw that. And finally, what have they asked for here? The number of good units and the cost per unit of the material. So the number of good units is 4,000. And what is the cost, effective cost? 78.5. And that's about this. Guys, 10 marks in your pocket. 10 marks in your pocket. Now I explained so much, so it took this much amount of time. If you're doing it by yourself, it will not take this much time. Clear with this? Now, what was required? You guys only answered. Here and there, I just directed you a bit. The problem was only with that little observation skills. That can be improved easily. And how will it be improved? Only by practice. Clear? So everything is in your hands. Subject is not difficult. Are you clear with this, guys? Right? That's about this particular question. Please go and update your library of adjustments. Go on. Come on. Write on question number 1. Question number 1. It's going to be, the type is going to be CSB space MCQ. Case study based MCQ. Library of adjustments. Please write on. CSB space MCQ, case study based MCQ. Chapter is going to be material cost. Right? And write on the concept. Can I? Write down components of material cost, semicolon. Components of material cost, semicolon. TOL. What does it stand for? Treatment of losses. TOL. write down treatment of losses, semicolon, non-operating items, quickly write down, non-operating items, that was regarding demurrage and cash discount, and semicolon, calculation of other expenses. That was also a challenge. I am only picking up the challenge, the pain points in this question. So tomorrow when you are visiting back, this library of adjustments will clearly tell you where you went wrong. Guys, clear? Only these points you just need to refer it. Guys, are you all clear with this? Yes. Right? That's the way to revise. Fine? Done. Is everyone sorted now? Fine? Shall we move on to the next one? Yes? Fine. So that's about your first question. Now let's go to question number 2. Right? Just give me a minute. Fine. Now question number 2. So once again, this question is regarding standard costing, which is supposedly a nightmare for many, right? Trust me guys, this is one of the easiest chapters. By the way, if you still find standard costing difficult, so I've uploaded a separate video. 4 hours entire standard costing is done. It's a revision video. All variances, I mean all the 4 cost variances are there. If you want, you can watch it whenever you find time. If you still feel you're not very confident about standard costing, I've proved it that not even a single formula needs to be mugged up with concepts, with conceptual knowledge. Right? Now let's come back to here as usual. So what should be our strategy? Read the questions. Right? It will not even take 30 seconds to go through all the 5 questions, because automatically you will look for these data while you're reading the case study. Fine guys. Right? Now, in the context of above, calculate the actual output of product Q. So it looks like they are manufacturing a product Q. They are asking us to calculate the actual output. So clearly, this indicates that this question could have a reverse working calculation. Fine. So one thing you were able to make out, you need not even touch the question first. Right. Next, the material price and material cost variances are, and so this means there is some material related variances in the question. Next, standard hours, net actual hours, idle time, labor efficiency variance, labor rate variance, labor related variances are also there. Fixed overhead variance, they are asking, volume variance. So basically 3 variances are being asked in this question: material related, labor related, fixed overhead related. Now just imagine they are trying to actually test the whole chapter in a span of just 1 question, right? So how beautifully they have coined this question. Right? I'm not sure you will agree with me when I say it's beautiful, but that's how it is. Now once you start preparing for that, now when the same or a similar question comes in the exam, you will definitely find it beautiful, right? Because it's worth your efforts, right? Now guys, fine. Now let's go back and read the question. Now when you're reading the question, now you look for these data and segregate the facts in such a manner that when you are actually solving it, you will be able to easily figure out the solution. Clear with this? Let's get started. ABC Private Limited is engaged in the manufacture of product Q. Right, this was expected. The final output is product Q. The product has the following standard production requirements determined by the technical team of the company post satisfactory completion of a test run. Raw material 2 units at the rate of ₹2 per unit. What is the meaning? For me to produce 1 unit of product Q, I need 2 units of raw material, and each unit of raw material should be purchased at ₹2. This is all standard data. Clear? Next, skilled labor. For me to produce 1 unit of output, I need 2.5 hours, and every hour is paid at the rate of 5. Fixed overhead 7.5 per unit. What is that? Someone said yes, go on. It's the absorption rate. Fixed cost can never be unitized. If they are still unitizing it, it's nothing but absorption. What absorption rate? Actual or predetermined rate? Predetermined. Perfect. It's a predetermined rate. Clear with this, guys, right? So they have given this also. Fine. Done. Sir, variable overhead not given. It's not asked in the question, right? That's about it. Leave it there. Next. The input of raw material Z has a yield of 80%, right? Now, the moment you look at this yield 80% and all, that's when many people will try to give up on this question and move to the next one. Don't worry, it's all very logical, very logical, right? No need to mug up any formulas. I'll tell you what it is, right? So, technically speaking, if I input, let us say 100, what is required? Effectively only 80 units of output will come, right? But this question is not as simple as the input output ratio is slightly different. What it is, I will walk you through, but that is all it is. So the input of raw material Z has an yield of 80% every time when infused into the production. The actual quantity of raw material Z consumed for the production during the year was 24,000 units, which means what? I have the actual quantity data, right? 24,000 units. Units of what? Units of what? Units of raw material, not product Q. Material cost, right? This is not output. Clear with this? Be very clear. So here what they have used is the output is also in units, input is also in units. Don't confuse it, right? Generally input will be in kgs. It will be easy for us to figure out, right? So this is going to be your input only, raw material. Then the usage variance of material Z was 2000 favorable, right? They have also given the material usage variance. It's going to be 2000 favorable. Whatever data is given, maybe if you want you can write it somewhere so that it's going to be easy for you to figure out. Then further, the actual amount of material cost for the material consumed amounted to what? It is going to be 45,000 rupees. So the actual cost, basically it's actual quantity into actual price. Basically whatever material cost I have incurred is going to be 45,000, right? This paragraph is related to material. That's about it. Fine. Next, going on to labor. During the said year, the actual working hours were 30,000, for which the labor cost paid by the company amounted to how much? 1,20,000, right? Now the idle time variance amounted to 10,000 hours adverse. Now, there is something called as actual hours worked. There is something called as actual hours paid, right? Basically what? Your workers are coming to your factory. They are spending 100 hours in the factory, right? But due to power cut or something, 10 hours is gone. 90 hours only they effectively worked. Clear? Now, will you pay them for 90 hours or for 100 hours? I will pay them for 100 hours. Because of my maintenance issue, why should I penalize them? Yes, sir. Clear with this? Are you all clear with this? Yes, right? So in this case, you tell me, looking at the wordings of the question, 30,000 hours is hours, actual hours worked or actual hours paid for? Actual hours worked or actual hours paid? Come on. It is actual hours paid because they have given for this 30,000 the company incurred a labor cost of 1,20,000. It is actual hours paid, which means you should calculate the idle time, reduce from it and arrive at the actual hours worked. Are you clear with this? Yes, people add up. People think this is actual hours worked and the entire solution will go for a toss. Clear with this? Right? Little observation is all that matters. Common sense, right? Fine. That is all about this area. Yes. Then actual fixed overheads incurred for the year amounted to 1,50,000. The expenditure variance was 25,000 favorable. In the context, they are asking you for following data. Fine, guys. Right? This is the question all about. Now, first let me just walk you through this material cost variance. So quickly, I will just give you an overview of the formulas involved in material cost variance. Quickly, I will explain the concept behind it. No need to mug up. There are some students who might have learnt it as table manner, right? Table 1 minus table 3, table 3 minus table 4 and so on. Personally, I don't believe in that. Hit the nail on its head. The formula, you look at the reason and you will get it. As simple as that. Standard costing is very, very simple, right? So now let me just quickly, it's not right or wrong approach, right? Different people or different faculties, they have their own approaches. Students also have their own approaches. Nothing wrong with that. Personally, I feel that directly understanding it logical is going to be very, very simple. Now, come on guys, tell me, material cost variance, tell me the formula. So material cost variance is what? What is the material cost you should have incurred? Compare that with what is the material cost you have actually incurred. So what is that? Standard quantity into standard price minus actual quantity into actual price, right? This is broadly classified into two. What and what? Material price variance, material usage variance, right? Now if you understand it logically, who is responsible for the price? The price responsibility is fixed on the purchase manager, right? So he is responsible for what? The price, standard price minus actual price. But what is the units he will be buying? The quantity decision is not his. The production manager will tell him, you just buy whatever I say. So this variance need to be calculated on the actual quantity. Logic? That's about it, right? Why do we need to mug this up? Usage variance on the other side is pinned on the production manager, right? That guy is responsible for what? Usage, quantity, standard quantity minus actual quantity. But my production manager is not dependent on my purchase manager. Multiply with standard price. That's about it. Why do you need to mug this up? Fine. Why do we need to mug this up? This is all it is, right? Fine. With this background, let us get started with this particular question. Now what are they given here? What are they given here? They have mentioned certain things. Actual quantity is given in this question as what? 24,000, right? The material usage variance is given as what? 2,000 favorable. So clearly you need to start off with usage variance, some balancing figure. With that only we are going to proceed. That's the way forward. Now material usage variance, how much have they given? So material usage variance is going to be 2,000 favorable, right? So material usage variance is, yes, 2,000 favorable. So what is material usage variance? Standard quantity minus what is the actual quantity? It's given in the question, right? See how much is it? It's going to be 24,000, right? 24,000 into standard price. What is the standard price? Per unit is given in the question. The standard price is 2 rupees, correct? Into 2 is going to be 2,000 favorable. So it's 2,000 positive, right? So now this 2 goes to the other side. So standard quantity minus 24,000 gives you how much? So 2,000 divided by 2 is 1,000, right? So standard quantity is going to be how much, guys? So 25,000. Clear with this? Now, what is the meaning of standard quantity? For your actual production, you should have consumed only 25,000 units. Correct? Correct. Now, they have also mentioned a few things here. For me to produce every unit of output, I am supposed to take how many units? 2 units. But wait, not the entire 2 units will be utilized. There is also an yield of 80%. With this, you can reverse work and find out the actual output, right? That's how we are going to do it. Now, basically here, you tell me, guys, so 25,000 kgs or 25,000, let me, for our discussion sake, this is raw material. Let's use the word kg, right? It's actually in units. Kg. I am inputting 25,000 kgs. So basically, for me to get 1 unit of output, 2 kgs of input should have been inputted. So can I say 25,000 divided by 2 should have been my effective output? But wait, I will not get fully, I will only get 80% of this. Tell me how much it is. 10,000 is going to be your output, right? Now you can just go and figure out 10,000. As simple as that, guys. It's very, very simple. It's all logical, right? Fine, done. 10,000 units, please come in. So 10,000 units is going to be your output. Fine, because without output you can't proceed in standard costing. Everything is based on standard. We are not talking about budget costing here. Standard means what? For the actuals, what should have been incurred? Clear with this, right? That's about the first part of this particular question, right? Now what else have they asked? What is the second part? Yes. And now they've asked for material price variance and material cost variance. Now it is fairly simple. So for you to do any kind of calculation, you need what? 4 figures. So standard quantity, standard price, actual quantity, actual price. Now guys, you tell me what is the standard quantity? We just found out 25,000 units. Standard price is how much? Huh? It's going to be 2 per unit, right? What is the actual quantity? It's given in the question. So this was given. Actual quantity is 24. Huh? Okay, 24,000 units. This is also given. And what is the actual price? They have given here in this question. They have given in the question the actual price. I mean, the total actual cost incurred was 45,000, and the actual quantity was how much? 24,000. They paid 45,000 rupees to actually to actually consume how many units? 24,000. So it's going to be 45,000 rupees divided by 24,000. How much is that? 1.875. 1.875. Is it perfect figure or it just keeps running? Okay, fine. That's about it. With this, you can plug it here and get any answer that you want. Right. So what have they asked for in this question? They have asked for material price variance. Price and cost. Okay, fine. So material price variance. Come on, tell me what is the formula here? Standard price minus actual price into what? Actual quantity, because this guy is not dependent on the, this guy is the control, he doesn't have control over the quantity, he just needs to purchase whatever the production manager asks him to. What is the standard price? 2. Actual price 1.875, and what is going to be the actual quantity here? It's going to be 24,000. Now don't say it's, yeah, so here basically is it going to be a favorable or an adverse variance? Why? Because it's positive. No, logically think, he was allowed to spend 2 rupees on every unit, but he has actually spent much lesser than that. So how much is that? 3,000 exactly favorable. Okay, 3,000 favorable. Clear with this, guys. Next, what is it? Material cost of? Material cost variance. That's going to be standard quantity into standard price minus actual quantity into actual price. So now it's just a plug and play. These 4 figures, just put it 25,000 into 2. You were supposed to incur. I think these two, the multiplication is already here. It's 45,000. right? This is going to be 45,000. So you should have incurred how much? 50,000. You have actually incurred only 45,000. That's going to be what? 5,000 favorable. And which option is this? Tell me. 3,000, 5,000. Sorry. Option B. Okay. B. Yes. Option B. 3,000, 5,000. 1 second, guys. Yes, it is 3,000 favorable and 5,000 favorable. Clear with this, guys, right? Now the material component is done and dusted now. Fine. Now shall we move to the labor part? Yes. Now there is one small mistake in the RTP when it comes to solving this part alone. I'll tell you what it is and why as well. So first, let us understand this once again logically. So when it comes to labor cost variance, very similar application of formula. So what is your labor cost variance? Standard hours into standard rate minus actual hours paid, because I will have to pay for the entire, in our example, 100 hours. Entire 100 hours I need to pay into actual rate. Clear? Done. This gets bifurcated broadly into two. Wait. Broadly into two. I will then introduce a third part. Right? One is called as, labor. Okay. Yes, 1 second. It's called labor rate variance. On the other extreme, labor efficiency variance. Labor rate variance. Who is the responsible guy? The HR manager. Right? What is his responsibility? For the rate. So what do you compare? Standard rate minus actual rate into actual hours paid. He needs to pay for whatever, for whatever time the workers are spending in the factory. That's not in his control. Clear? Whereas efficiency wise, you are judging whether these guys are working efficiently. Who makes them work? The production manager. It's the responsibility of the production manager. So now tell me, what does the production manager do? Right? So here it's going to be standard hours minus actual hours worked. Why? When I'm judging the efficiency, in our example, I can only take 90 hours. 100 hours totally he came to my place, but he finished the work in 90 hours. 10 hours I made to sit him in the dark, no power. Clear with this. So when I'm judging his efficiency, I will only consider the actual hours worked. Guys, does it make sense? Right? Into what? He is not dependent on the other guy, the HR manager for the rate. It's going to be standard rate. So then how will it tally on the top? So our labor idle time variance comes in. This is nothing but the difference between the actual hours worked and actual hours paid. That's nothing but idle time into standard rate. Now it will tally. Clear with this? Yes, right. Now come to the question. What have they given? In this case, they have said during the said year, the actual working hours were 30,000, for which the labor cost paid by the company was 1,20,000. The idle time variance amounted to how much? 10,000 adverse. First itself, can you find out the idle time? Yes, idle time variance is how much they have given? 10,000. It need not be given adverse. Idle time is always adverse. So this is always adverse. You need not even worry about it. Fine, clear with this. So here it's 10,000 adverse. So here idle time into what's the standard rate? It's given in the question. The standard rate is given as 5 rupees per hour. Right? Into rupees 5 is going to be how much? 10,000 adverse. Clear with this. So here it's going to be idle time is going to be how much? 10,000 divided by 5 is going to be how much? 2,000 hours. Are you clear with this, guys? Are you clear with this? Yes. Now list out the ingredients in this formula. What are all the ingredients that we have in this formula? You need standard hours. You need standard rate. Right? Then you need actual hours. Wait. Actual hours paid. Actual hours worked. The difference between the two, that we call it as idle time anyways. Then you have the actual rate. Clear? If you find out these ingredients, any variance in the question you can calculate. Yes. That's about it. Now standard hours, how much is that? Is it given? Yes, you can find out. We found out the output. Guys, wake up. So we know that you're going to produce 10,000 units. Every unit requires how many hours? 2.5. Correct. So it's going to be 10,000 units into 2.5 hours. How much is that? 25,000. Clear with this? So 25,000 is going to be the standard hour. Standard rate, rupees 5 per hour. Where did you get? It is given in the question. Actual hours paid, how much is that? 30,000. How do you know? It is given. Now many people confuse this. They take actual hours worked as 30,000. Then the answer will completely change. Right? So operation success, patient dead. Everything you would have done, no marks. There is no point here. Clear with this. Observe. Idle time we just calculated. How much is this? 2000 hours. 2000 hours we just calculated. It's nothing but 10,000 upon 5. Clear with this? So now what is going to be my actual hours worked? It's going to be obviously lesser, 28,000 hours. Within bracket the calculation is going to be 30,000 minus what? 2,000. Are you clear with this? And what is the actual rate? It's they have given it, no? 1,20,000 is what they incurred for a total of 30,000 hours. So how much is that? So it's going to be rupees 4 per hour. So how did you get this? 1,20,000 divided by 30,000 hours. Clear with this? Done? Done with this. Anything you want you can do. So now go to the question and see what have they asked. What have they asked? The first one they have asked for. They have asked for standard hours. Standard hours. Net actual hours means what? Actual hours worked. That is a net actual hours. They are giving it a different name. Now only they are giving it a different name. Don't think it's something out of syllabus. Right? Net actual hours is nothing but net of the actual hours. Clear with this? Right? It's actual hours worked and the idle time. So we just saw what is the standard hours? We got this, no? So standard hours 25,000. Right? So it was 25,000. Then net actual hours is 28. Okay. Idle time is 2,000. Which option is that? Ticket. It's going to be D. Okay. So this is going to be D. Clear with this, guys? Right? Then move on to the next one. What is it? Second. So yes, it says the third one. Then they have asked for labor efficiency and labor rate variance. Now this is where they have made a mistake in the institute in this RTP. So let me tell you, we will just calculate these figures. They have asked for labor rate and efficiency. Okay, efficiency and rate. Okay, labor efficiency variance. If we were to calculate, how much is it going to be? Standard hours evlo? So it's going to be 25,000 hours minus actual hours worked is how much? 28,000 hours into standard rate is how much? How much is it? 5. Okay, so how much is this going to be? 1,500, no? It is going to be 15,000 adverse because I have taken more time, right? But what they have done in their calculation, instead of 28,000, they have taken 30,000, right? Now don't think that, sir, assumption is wrong. No. Because if you add the 3 for us, it will tally. If you do as per the institute study material, it will not tally. Reason is, they have only mentioned, because actual rate was taken only by dividing the 2. Then that is actual hours paid only, no? Yes, sir. Clear? There they took one thing, here they have taken a different thing, right? So then what do we do? Labor rate variance is matching. The correct labor rate variance is matching, right? And there is only one option with the correct labor rate variance. So that way you can do, but don't worry, in exam it will not be like this and all, right? In exam generally, it's very extremely rare to find mistakes in the exam paper. Clear with this? Maybe here and there somewhere in publications it could be, or there could be another justification. In some authors, if you see materials, they will say labor efficiency variance, they will take the actual hours paid only. Under that they will bifurcate this into idle time and sub efficiency and all. That is very rare. Then what do you call this gang variance and mix and all? So it is not like that. Technically speaking, this is what it should have been, but they have taken it differently. So take it with a pinch of salt, but this is what it is. Ideally the correct answer is 15,000. Clear with this, guys? And what is going to be the labor rate variance? Standard rate is how much? 5. Actual rate was how much? 4 into actual hours. How much is that? Actual hours paid for is 30,000. So that's going to be what? 30,000 favorable. Are you clear with this, guys? Are you clear with this? So what is the thing that they have given? This is fourth, yeah. So they have mentioned it as C, basically because this efficiency, the rate variance is 30,000 favorable. That is the only option if you notice with the right figure. Here it is ideally not 25, it should have been 15,000 adverse. Clear with this? Logically we did it, no, right? And if you add the 3 figures, it will come to your daddy figure, like the topmost figure, right? It will tally. Clear with this? That's the beauty of standard costing. Even if you have made some calculation error, you can actually check it, right? Clear with this, guys? Fine. And finally comes the big different animal, fixed overheads volume variance, right? So fixed overheads variance, basically, guys, so what is the formula for fixed overhead variance? Cost variance. So many students, as I have observed in my past, sorry. So one second. There is no concept of standard fixed overheads. Fixed is fixed. How can you say for the actual, what should have been my fixed? Then it is not fixed, no? Then it is variable. Are you clear with this? Fixed overhead cost variance is nothing but under or over absorption calculation. Clear with this, right? First understand, this is nothing but absorbed fixed overheads minus actual fixed overheads. That's about it. Clear with this, guys, right? This is broadly bifurcated into two. One is called as fixed overhead expenditure variance. The other one is called as fixed overheads volume variance, right? Fixed overheads expenditure variance, what is it formula? Simple logic, budgeted fixed overheads minus actual fixed overheads. Clear with this, right? On the top, what do we have? See, there are three different overheads. One is your budget, the other one is your actual. In between you have absorbed. Basically, in costing, what we do is absorbed overheads is the overheads accounted for. Correct? So, because why? You don't know the actuals at the time of preparing your cost accounting systems, and costing is one thing that cannot wait till the end of the year. Right? If it waits till the end of the year, that is called as financial accounting. Clear with this? Costing is a concurrent process. So, we are forced to use something called as predetermined rates using the budgets. Clear with this? Using the budgeted rate, we apply it on the actuals. That is called as your absorbed overheads. So, here on the top, what are we comparing? Absorbed with actuals. On the left hand side, what are we comparing? Budget with actuals. So, now to arrive at this top figure, what will you now do? Remove this. It's going to be absorbed fixed overheads minus budgeted fixed overheads. Basically, it's nothing but balance figure. Clear with this? Right? Now, you got these figures with you? Right? Now go to the question, what have they given? What is the given data here? With respect to fixed overheads, what have they given? The actual fixed overheads incurred was how much? 1,50,000. Expenditure variance was 25,000 favorable. Right? So here the actual fixed overheads was how much? 1,50,000. Right? Budgeted fixed overheads I am yet to figure out. Right? This is equal to how much? 25,000, 25,000 favorable, so put it positive. So what is my budgeted fixed overheads? So it goes to the other side, it becomes how much? 1,75,000, right? So now you got the budgeted fixed overheads. Now what is asked for in the question? They have asked for the volume variance, right? Volume variance, how will you find out? Budgeted fixed overheads, now you have this 1,75,000. Absorbed fixed overheads, how much is that? So how will you calculate? Now look at this. They have given the absorption rate here on the top. Every unit should be charged with an absorption rate of 7.5. Actual output, we only found out 10,000 units. Just imagine the first step if you had went wrong. Actual output, instead of 10,000, had you put 12,500, that is without the efficiency, chain error, half an hour in exam or whatever time that you spend for this, you should not spend half an hour by the way. So, if you, whatever time that you spend, you will go for a toss. Guys, this is the power of observation, right? 6 months, okay, 4 months is no joke. Okay, 4 months is no joke. I'm not trying to threaten you here. What I'm trying to say is just be careful, right? These are avoidable. These things are avoidable, right? Is it anything difficult or technical involved here? Nothing. Clear with this, right? So now what happens here? So now what is my absorbed overhead? 7.5 we saw, 7.5. Now predetermined rate multiplied it on the actual output of 10,000. Right? So how much is that going to be? So 75,000 is going to be my absorbed, right? And the budget is going to be how much? 1,75,000. So how much is this? It's going to be 1 lakh adverse. Are you clear with this? And which one was that? Option number C. Yes, option number C. I think that's the answer. Yes, look at this. Option number C. Clear with this, guys? Clear with this? So this standard costing alone, I wanted to completely redo it because there were some issues in the manner of working in the RTP itself. Are you clear with this, guys? Right? Once again, I'm telling you, since I am explaining all these things with a conceptual background, it appears as if it takes this much time. It actually doesn't take this much time, guys. In exam, it really doesn't take this much time. The only thing is you need to be very observant. Are you clear with this, right? And with that, one full 10-mark question is over. See, it was spread across 3 different variances. Technically, variable overhead alone was not. Variable overhead is nothing. It's same as your labor only. Correct, right? Without that mix and all, mix is not there. That's the only difference. But for that, everything else is the same. So technically, they tested the entire chapter with a single 10-mark question. Fine, right? Look at how institute is now moving. See, this is what you need. This is how you also need to move along with this. This is how you need to step up your preparation. Clear with this? So now let's go and update our library of adjustment, shall we? Yes, sir. Yes, come on, let's do this. Write down. Question number 2. Case study based MCQ. CSB MCQ. Chapter standard costing. Chapter standard costing. Concept write down. MCV semicolon, LCV semicolon, FOHCV, the 3 variances. Material cost variances, labor cost variances, fixed overhead cost variances. Please write down quickly. Yes, done. Semicolon, yield adjustment, YIELD, yield adjustment. That was something unique to this question. Semicolon. One other thing that I saw. Yes, actual hours worked and paid. Write down actual hours worked and paid. This should be in such a way that you remember what was the adjustment. That's all. Actual hours worked and paid. That you write down. I was about to say one more thing. Calculation of actual output. That was the key. Calculation of actual output within bracket reverse working. Calculation of actual output within bracket reverse working. See how innocent this question seems to be, right? But or innocent you call it disgusting, I don't know. But at the end of the day, there are so many things that were involved here. Clear with this, guys? Now just imagine the day before your exam. Now if you revisit, will you relive the classroom moment? Will you now be able to recollect what were the things that were involved? This is the power of note taking. Do this for all the subjects whenever you are doing, right? You do it by yourself. You will just see how drastically your preparation will improve, right? Fine. Yes, shall we go over to the next sums, right? The next few sums are direct, pretty much simple and straightforward. It will not take this much time. Let's quickly run through, shall we, guys? Yes. Let's go to question number 3. So I told you 2 case study based MCQs, they are done and dusted, right? Now let's move on to these standalone MCQs. So question number 3, this is relating to overheads. Shall we, guys? Yes, I want the answer the moment I finish reading this. Okay, fine. The accountant for Brilliant Tools Limited applies overhead based on machine hours, right? So by the way, guys, so in your overheads, right, how many different types of base quantities are there to arrive at the absorption rate? 6 different base quantities are there. There are 6 types of absorption rates. What are they? Direct, okay, machine hour, labor hour, then percentage of direct material, percentage of direct labor, percentage of prime cost, and directly production units, directly per unit level. Clear with this? Why these 6? Because overheads is an indirect cost, right? So you are trying to convert an indirect cost into direct, that is represented on a per unit level. So when you have to do this, the bridging, when you have to bridge this gap, it needs to be bridged using any of the 6 direct cost components. So all the 6 things that I mentioned right now are some way or the other readily available on a per unit level. Using these things, I bridge an indirect cost and represent it on a direct level. This is the reason why you have only 6 and not there is no 7th one. Are you clear with this, guys? Right? So now that was just a passing reference about a background. Now what have they said? In this company uses what? Machine hour rate. The budgeted overheads and the machine hours are, so 1,30,000 is going to be my budgeted overheads, and the budgeted machine hours is going to be 8,000 hours respectively. Actual overheads and the machine hours incurred were 1,37,500 and 10,000 hours. The cost of goods sold and inventory data compiled for the year are direct material cost is given, COGS is given, units of WAP is given, and FG is given. What is the amount of under or over absorption of overheads? Very, very simple 2-mark question. Can anyone tell me what is the under or over absorption? Sorry? Option A, B, C, D? Option A, right? Anyone else? Anyone else? Please, I hope you guys are not looking at the answer. Okay. So anyone else? That's all? First of all these data are not relevant at all. First, absorbed overheads. How will you calculate absorbed overheads? Your predetermined rate into what? The actual hours. What is the predetermined rate? 1,30,000 divided by 8,000, correct? So it's going to be 1,30,000 divided by 8,000. How much is this? 16.25 is going to be my predetermined rate. This, every time I spend an actual hour, machine hour at the factory, I'm going to charge it with 16.25. What is the actual hour spent? It's going to be 10,000 hours, right? So now what is going to be my absorbed overheads? 1,62,500, right? And how much is the actual overheads? 1,37,500. And what is the difference between the two? How much is that? 25,000. Under or over? I have absorbed more while I've actually incurred only what 1,37,000. This is going to be an over absorption by 25,000. Very simple, right? That's about it. Clear with this? All these data, why have they given? The moment you saw this, what did you think? You should have thought something. It's okay. So the moment, if I were you, the moment I saw this, I would have thought there is something related to supplementary rate. So in supplementary rate, you need to apportion between three things and all, right? Units sold, units unsold, closing WAP units, right? So you need to do all that, provided the under or over absorption is attributable to normal reasons, right? Right? So it appeared as if it was something so big, but there is nothing actually. Clear, guys? Fine. But that is again a psychology test. The moment you look at these things, you will immediately think, have I missed out anything? They have asked only under or over absorption. That's all they have asked. Clear, guys? Fine. Let's go and update our library of adjustments. Write down, quickly. Write down. Question number 3, write it down as single MCQ. Single MCQ. Chapter overheads, concept UA stroke OA. Under absorption stroke over absorption. Concept UA stroke OA. Are we done? Yes. Shall we move on to the next one? Right? Okay. Don't worry, I'll give you breaks. Sufficient breaks I'll give you. Do not worry about that at all. At least we will finish this standalone MCQs. See, we finished one sum, it just took what, a few minutes. We'll at least, I think, up to question number 8, I think, oh sorry, 7. There is some standalone MCQs, like it is not going to take in the next 10-15 minutes, and then we can break happily. Yes? Fine. Right. So process costing. The following information is available in respect of process 1. Raw material purchased and introduced 10,000 units at the rate of 5 per unit. Raw material received from store 4,000 units at the rate of 6. Direct labor is 40,000. Overheads 28,000. Output of the process is 13,500. Normal wastage is 5% of inputs. The scrap value of wastage is going to be 4 rupees per unit. What is the value of abnormal gain? Now, this is somewhere related to what we saw in the very first question, that the diesel petrol example I gave you, right? The treatment of losses, right? Now there's one thing that you need to know. There is one very important thing that you need to know. How will you calculate the cost per unit? How will you calculate the what? Cost per unit, right? So that's a very important calculation. That's a very important calculation. This is question number 4. Huh? Okay, question number 4. How do you calculate cost per unit? Simple, logically, let me explain, because this is a very detailed explanation in our regular batch, but let me just make it as concise as possible and give you a background. Basically, when I am calculating the cost per unit, in the numerator I take the expected cost. Denominator I take the expected good units. Correct? Am I right, guys? Yes, sir. Expected cost, how will you calculate? Total cost. That's all, no sir? No. I know that normal loss means what? I know that I'm going to lose. Correct? And when my normal loss, when my units that are getting scrapped, when they have a income, a scrap value, right? I know that at the time of incurring the cost itself, I know that I will incur some costs, I know that I will lose some units, and I know that these lost units can generate some revenue for me. Yes. Guys, correct? So the denominator should have the net expected cost. Agree with me? Yes, so can I say the net expected cost is going to be total cost minus normal loss scrap income. Don't say scrap income, normal loss scrap income. Correct? Because before even I start my production, I know that I'm expecting that I will lose some units, and each of these units will generate some scrap revenue for me. Correct, guys? So, because whatever is the total cost is being borne by the expected good units, correct? And any scrap income that is generated out of the, the scrap units, normal loss units, should also, the benefit should also be passed on to them. It is only fair that way, right? Divided by, what is the expected good units, not the actual good units. Expected good units, what is it? Input whatever I do minus normal loss units, correct? Expected good units need not be actual good units, correct? Because actually I might have lost more or I might have lost less. If I have lost beyond what I expected, that's called as an abnormal loss. If I have lost less than what I've expected, that's called as abnormal gain, and this sum is about abnormal gain. Are you clear with this? Right? Now, what have they given in this particular question? What have they given in this particular question? They have said that raw material purchase and introduced was how much? 10,000 units, right? Received from stores was 4,000 units. Predominantly what has happened, they have inputted how many units? 10,000 plus 4,000 units were inputted. Overall 14,000 units were inputted. Agreeing with me on this? Right. Now, where are these 14,000 units present? That is what we need to find out right now. They have said, look at this. What have they said? Output of the process is how much? 13,500. They have mentioned that the actual output turned out to be what? 13,500 units. Fine, this is all they have given. Now tell me guys, I inputted 14 and I have 13.5 with me. What is the actual loss? How many units have I actually lost? 500 units, right? But in costing, I can't deal directly with loss. Loss needs to necessarily be segregated into normal and abnormal. Clear? Because normal cost is treated as a product cost, it will enter into the stock valuation. Abnormal loss, what happens? It is treated as a period cost, it will hit directly my cost sheet. That is, ideally speaking, it will come after my cost of goods sold and all, along with AOH, SOH, technically speaking. Clear with this, guys? Right? So this classification is very important. Correct? So the first thing that I will do is, first I will say actual loss is how much? 500 units. How did you get this 500 units? I inputted 14,000 units, but I ended up getting only 13,500 units. Correct? Now this 500, I am segregating it into two. Normal loss. First on the left side. What is my normal loss? They have said, generally I expect whatever I input, 5% of that I am expecting to lose. That's the inherent nature. Right? So tell me guys, how much is this? So it's going to be 14,000 into 0.05. How much is that? That's going to be 700 units. I will also do the workings here. It's going to be 5% on 14,000. Yes. So now you tell me, I was prepared to lose 700, but I've actually lost only how much? 500. So 200 units turned out to be good. Clear? So that is called as abnormal gain, and put it within bracket. Right? And this is ideally a balancing figure. Are you clear with this? Are you clear with this? Abnormal gain doesn't mean I inputted 14,000, magically 200 units got created, output became 14,200. No. I inputted 14,000, I expected to lose something, but I lost only something lesser. Or in other words, my expected good units were less, actual good units were more. Are you clear with this? Yes. Right? This is called as abnormal gain. Clear with this? Right? And abnormal gain, what will you do? It is abnormal. So don't take it, it is not a part of product cost. What happens is, it again goes on to increase your profit. Are you clear with this? So that is again treated separately as a period cost. If you had to prepare a costing P&L account, it goes to the credit side. Clear with this? It will not even enter into any of the products. Clear with this, guys? This is what it is. So now what have they asked for here in this question? So what is the value of abnormal gain? So now tell me guys, what is going to be the cost per unit in this case? What is going to be the cost per unit? Total cost. How much was the total cost? So the total cost here is going to be 10,000 at the rate of 5, right? Then it's going to be 4,000 at the rate of 6, plus 40,000, plus 28,000, right? So can anyone tell me what is the total cost? 142,000. Okay, so 1,42,000 is my total cost. Right? And at that time, even before I started the production process, I know, or I expected, that expectation need not be actuals. Correct? I expected to lose how many units? 700. And each of these 700 units, I know that I'll be generating a scrap income of how much? How much, guys? 4. Right? Divided by, what is the total units I inputted? 14,000. And how many units I expected to lose? 700. Clear with this? So now tell me guys, how much is this going to be? So it's going to be 700 into 4, that's 2,800, right? So 2,800, so 1,42,000 minus 2,800 gives you how much? So 139,200 should be apportioned between 14,000 minus 700, that's going to be 13,300 units. So what is going to be the effective cost per unit? 139,200 divided by 13,300, that's going to be 10.4666. It keeps on going. I would suggest you retain the decimals in your calculator. Use that M plus MRC. Retain the decimals, don't round off generally. right? Because process accounts generally needs to tally. It needs to be tallied. There is no balancing figure. Every line item needs to be arrived at. Clear with this? Now what have they asked for? How many units of how many abnormal gain? So it's going to be 200 into this. How much is that? 2093.23, right? And what option is that? D. It's going to be option number D. Are you clear with this? Right? Pretty much simple, right? And how it appears when you're preparing a process account. This is how it appears when you are preparing a process account, right? So obviously you guys know, right? You need to have particular units and amount. This units, by the way, it's not that equivalent units. It's just a tracker column. Just a tracker column. Right, we will come to equivalent units when we are doing another sum. It's there in the RTP, right? So it's going to be, we just fill in all the debit items are nothing but all the costs, right? So generally the entire chapter of process costing is about preparation of process accounts, where the debit items are given, you need to apportion it between the credit items. Clear with this? Yes, since it is an abnormal gain, obviously it comes on the debit side here. Clear with this, guys? So basically here one more thing, ideally speaking, there is no account called as normal loss account. Why? I told you normal loss cannot be valued separately, right? Then what is this, sir? It is a normal loss scrap income account. Clear with this? Ideally speaking, this is why in my regular batch also I just keep telling, do not write it as normal loss, write it as normal loss scrap income account. Just imagine if you're mentioning it here, right? Whatever amount that you're receiving, you're going to put it on the credit side of the ledger. Correct? Credits, it's basically an income ledger. Clear with this, guys? Right? So that is what it is. They have valued it. So this 700, they multiplied it with 4, they arrived at this figure. Correct? So technically speaking, this was my expected cost. Correct? No. Total cost on the debit side minus my normal loss scrap income. Correct? It is apportioned between what? Expected good units. What is expected good units? It is not 13,500. That was actual. 13,500 minus 200. 13,300 only I expected. Are you clear with this? So that's why one item is appearing on the debit side. Clear with this? So how did we do that? 13,500 into whatever we got. Look, this is what they have also got. 10.466. They have. Okay, in exam you can present it in 3 or 4 decimals, but retain the decimals in your calculator. Clear with this? Multiply that with 13,500, you get what? 141,293.233308. It just keeps on going, right? And on the other side you get this, and nowhere in the process account you should have a balancing figure. Each and every figure should be arrived at. Clear with this, guys? Yes. Right? Any issues? All these things are not required. You need not prepare a process account for this 2-mark question, right? But however, this calculation without this you can't even do. Clear with this, guys? Fine. Just go and update your library of adjustments. We are through with this sum. Write down. Write down. Question number 4, single MCQ, process costing, abnormal gain calculation. And this attempt, I strongly feel some adjustment relating to abnormal gain will definitely come. Don't ask me why, it's an intuition. And my intuitions generally work about 80% based on the past record, but don't ask me if it doesn't come. Again, I said you don't pull the top and the next generations and all, but I'm just saying somehow I feel abnormal gain is all sorted for the exam. That's what I feel personally. Only 2 people know what's actually going to come. One is God and the other one is ICA, but for that no one else knows. If they know, then they will be behind bars. Fine. Okay guys, done? Done? Yes? Okay, shall we move on to the next one? Right. This question is about service costing, more specifically to the hotel sector. Shall we get started?
Yes, sir.
Okay. Again, this is more of, I think, a study material question type only. There they had mentioned it as single suites, double suites. Yeah, like that they had mentioned it. So it is sweets. Yes, someone is saying it is actually sweet. Sweet as in how we say sweet. Laddoon sweet solranga. Adhe maridhan. It's pronounced as sweet. Nama sweet room nu solli palagirukom actually, but it's actually sweet. Anyways, fine. Coming back here, they have just changed it as deluxe room, premium room. Vivek Kamani solra sir na maaru veshithila iruken wala andha madri. So yes, a hotel has 200 rooms, 120 deluxe rooms, and 80 premium rooms. The normal occupancy in summer is 80% and in winter it's going to be 60%, right? The period of summer and winter is taken as 8 and 4 months respectively. Assume 30 days in each month, and the room rent of the premium room will be double the deluxe room. Hotel is expecting a profit of 20% of the total revenue. The total cost of the year is given as some phone number, it's given. Okay, so calculate the room rent to be charged for the premium room. First question, can I add 120 with 80? No. Why? Can't add. It is like asking how much is 5 donkeys plus 4 monkeys? 9, what will you say, zombies? No, it cannot be added. You cannot compare dissimilar items. Then what will you do? Make it comparable and add, right? So whatever revenue that I generate by letting out 1 room day of a premium room is equivalent to what I will be getting by letting out 2 days of my deluxe room. Correct, guys? Yes, sir. Correct, guys? Or in other words, 1 premium room day is equivalent to 2 deluxe room days. Correct? So can I convert everything into equivalent deluxe room days and do the calculation? Yes. So I have 120 actual deluxe room days, rooms, right? Plus, if I'm converting, I will say 80 premium room into 2, I'm putting it as 160. 160 plus 120, how much is that? 280. So I am saying every day I have 280 equivalent deluxe room days. This is equivalent. Physically I have only 200 rooms, 120 plus 80 physically, but for the purpose of all my calculations I need to convert it. Clear? Equivalent deluxe room days. Are you clear with this? Yes, right? Now every day 280 equivalent deluxe rooms are available. Yes. Now what are they saying? What are they saying? Now 8 months is what? Summer. 4 months is winter. During summer 80% is occupied, meaning what? Of the total rooms available, 80% of them are occupied. Clear with this? So now we need to calculate the total room days, because this room days is nothing but the unit of measure in case of a service sector. Correct? I can't say, if I'm a pen manufacturer, I can say 1 room, 1 pen, right? Whereas these guys, what will they say? Per room per day. It's called a composite cost object. They can't say per room. If you say, sir, per room it is going to be, the tariff is 5,000 rupees. What will you do? You will pay 5,000 rupees, stay for 1 year. Is it accepted? No. If they just say, sir, 5,000 rupees per day, you will say, okay, sir, thank you. You will bring your entire family, enemies also you will bring, entire 200 rooms you will occupy. You just said per day. So it needs to be very clear, per room per day. That's called as a composite cost object, right? This comes only in case of a service sector. Clear with this? Now in this case, I have with me 280 equivalent deluxe rooms. Correct? Now what is the total room days available for me in a year? Can I say it is 280, right? During summer, what happens? 80% of the rooms are occupied. Using this only I generate my revenue. Correct? Like that, every day I have 280 rooms. Out of that, 80% are occupied. Like that, there are 30 days in a month, and like that, 8 months is going to be my summer. Similarly, I have 280 days, but this time it's going to be 60% occupied. Like that, for 30 days a month, and like this, I have 4 months a year. Add it up. What is the total number of equivalent room days? 73,920 equivalent room days. Clear with this, guys? Clear with this? Any problem here? Any problem here? So basically whatever revenue that I need to generate comes from 73,920 equivalent deluxe room days. Agree with me on this, right? So now tell me, what is the total cost they have given? It's 2 crores 66 lakh 11,200, and the hotel is expecting a profit of how much? 20% on what? On sales. On sales. This is their cost. Correct? So you have a total cost, profit. You have the sales. Here we call it as takings basically, or revenue. You can call it as revenue, right? So if revenue, the profit is expressed as what? As a percentage of sale. So if my revenue is 100, profit is 20, cost is going to be 80. If cost is whatever this phone number is, how much is going to be my total revenue? It's 266,11,200 upon 80 into 100. How much is that? 266,11,200 divided by 0.8. So 33,26,4,000. Correct? It's going to be 33,26,4,000. This is the total earnings, total revenue generated by letting out how many equivalent single room, deluxe room? 73,920 divided by 73,920. How much you get? 73,920. It's going to be 450 rupees, right? And they have an option readily for you, right? That is not the answer, because they have asked for premium rooms. Premium room tariff is twice your normal deluxe room. It's going to be 900. Clear with this, guys? As simple as that, right? Clear with this? That's why they are giving 2 marks. Fine guys. Again, I had to give a background explanation. That's why it took this much time. Exam, it will not take that much time. Do not worry about it. Little observation is all that matters. Here, it is on revenue. How, genuinely tell me, how many of you were tempted to add this 20% on this? Yes, it's okay. But make sure that you are not repeating the mistake in exam. That's all counts. Clear with this, guys? Yes. Fine. Shall we move on to the next one? Update your library of adjustments quickly. Write down. Question number 5, single MCQ, service costing. Single MCQ, service costing. Write down. Hotel costing, semicolon, equivalent room tariff. Equivalent room tariff. Equivalent room tariff. Done? Shall we move on to the next one? Yes, sir. Perfect. Let's go to the next one. The next one is nothing great. It's one good for nothing question basically. Anyways, let's quickly do it. ALC Limited is an insurance company. It has launched a new term insurance policy with the name as Protection Plus. The total cost of the policy during the year was 160 lakhs or 1.6 crores. The total number of policies sold is 410 and the total insured value of the policy is 920 crore. What is the cost per rupee of insured value? What is it, guys? You take this and divide it by, so 1.6 crores divided by 920 crore, cost per rupee of insured value they have asked. The value of insured, the insured value is 920, total cost is 1.6 crores, correct? Nothing great. 1.6 divided by 920, forget about the figures and all, it's going to be 0.0017 and that's about it, correct? Clear with this, right? Nothing great here. Okay, fine, let's go and update the library of adjustments. Write down. Again, service costing, single MCQ service costing, cost per rupee of insured value. Cost per rupee of insured value. Cost per rupee of insured value. Done? Shall we proceed forward? Okay. This is the last MCQ we have in the RTP. It's in the chapter budget and budgetary control. A business manufactures a single product and is preparing its production budget for the year ahead. It is estimated that 2 lakh units of the product can be sold in the year and the opening inventory is currently 25,000 units. The inventory level is to be reduced by 40% by the end of the year. What is the production budget in units? Come on, tell me guys, how much is that? How much is the production? 1,90,000. Okay. Guys, always remember this is pertaining to a concept called as functional budgets in your budget and budgetary control chapter. Now, always remember budgets, when you are budgeting, the budgeting process first begins with sales, right? Because only when you know the units to be sold, you can arrive at the units to be produced. Only if you arrive at the units to be produced, you can know how many kgs of raw material to be consumed, how many units of raw material to be purchased, and the other components of cost are revolving around that. Clear with this? Why, sir? Because for example, let us say I am planning to sell, my sales is going to be 1 lakh units, right? So if nothing is mentioned, which means what? You need to produce 1 lakh units. You need to sell 1 lakh, so which means you need to produce, correct? But they are saying that is not sufficient. I also want to keep a closing stock of 20,000 units. So which means what? You now need to produce how much? 1,20,000. But wait, in the beginning of the year, I already have, let us say, 10,000 units with me. So you reduce that. Technically speaking, in this year, you only need to produce how many units? 1,10,000 units. So for me to arrive at the production, the first figure I need is sale, right? And only if I arrive at the production, the other components of cost like material, labor, overheads can be arrived at. So sales is always the starting point. Are you clear with this? Now in this question, what are they given? It is estimated that 2 lakh units can be sold. So how much is sales? 2 lakh units, correct? Right. And they are currently having an opening inventory of 25,000, right? And the inventory level is to be reduced by 40,000, right? So, by 40%, right? Not to read the word, it's by. So which means my closing stock is going to be 60% of my opening stock, correct? Right? So what is my opening stock? 25,000. 60% of that is how much? How much? 15,000. So technically speaking, if I am planning for production, It is not enough if I just produced 2 lakh units. I should also provide for a closing stock of how much? 15,000. So technically speaking, I should have produced 2 lakh 15, but wait, anyways I have a ready stock of how much? I have a ready stock of 25,000 with me. That's nothing but my opening stock. So now you need to produce only how much? 1,95,000, and that brings you to option. Sorry, 1,90,000. Sorry, that brings you to option number B. Are you clear with this, guys? Right, and that's about this. That's about it. Very simple. Right, so let's go and update our library of adjustments. Write down. Question number 7. Single MCQ. The chapter name is budget, and the concept is production budget. Concept name is production budget. Fine. Right. It's a small question on employee cost. It's relating to a concept called as labor turnover. It's pretty much straightforward. So labor turnover basically is nothing but it tracks the rate of churning of employees in organization. Churning means what? Entry and exit, right? So sir, what does this labor turnover rate indicate? See, basically it talks about the movement, entry and exit of workforce, right? So what is the ideal labor turnover rate? There is nothing as such. Basically, then why are we calculating it? Every industry has their own labor turnover rate. You compute your company's labor turnover rate and compare it with your industry average. Clear with this? This is what it is. By standalone, 14%, 8% doesn't make any sense. Clear with this? Unlike your current ratio or something like that, debt equity ratio like that, this doesn't make sense by itself. It is a relative measure. Are you clear with this? There is there's one poem also which you might have heard. For men may come and men may go, the company goes on forever, right? So something similar of that sort. But there's one thing that you need to understand. A high labor turnover rate is not good, because you would have hired someone, you would have trained them for a few months, and by the time they settle down with the work, and by the time they actually start doing the work productively, what if they just suddenly resign and go off? So then it is going to be a huge cost for the company, and you cannot take the benefit out of whatever cost that you have incurred. Clear with this? Similarly, if the same employee stays on forever also, that is a low labor turnover, that is also wrong, because then you are not open to a fresh talent. Clear with this? There has to be a balance between the two. So that is what this concept of labor turnover captures. However, none of these concepts are relevant to crack this sum. It is pretty much a straightforward sum. Shall we just get started here? Yes. Fine, guys. So the labor turnover rates for the quarter ended 30th of June 2024 are computed as 14%, 8% and 6% under the flux method, replacement method and separation method respectively. Broadly, there are 3 methods using which you compute this, right? So now, if the number of workers replaced during the first quarter of the financial year is 36, compute the following: the number of workers recruited and joined, the number of workers left and discharged, right? Now basically there are 3 methods. One is called as the replacement method, the other one is called as separation method, the other one is called as flux method. Replacement means what? But before that, separation means what? If someone is exiting your organization, it is called as a separation. They are separating ways from you. Clear? So why could they separate? Because maybe they want to retire, right? Or at times could be because of death, very rarely, or because sometimes the company themselves can fire them. Correct? Right? So all these things put together, if someone is moving out of your organization, that comes under separation. What do you mean by replacement? The ones who have now gone out, if their seats are getting filled, that is called as replacement. Now, flux method captures what? It captures everything, including what? New admissions, or in other words, I have opened up a new position right now, right? Till now, this position itself was not there. But for the first time, I have actually opened a new position. That is not replacement. Correct? That is a new position I have opened that also gets tracked under the flux method. Are you clear with this, guys? Yes. So now they have given some, the ratios and all that. Basically, first let us quickly see what is the formula involved here. So your labor turnover rate under the replacement method, the formula is going to be number of replacements divided by average number of workers. Separation method, what is the formula? Number of separations divided by average number of workers. And under the flux method, it's going to be number of separations plus they call it as accession. What do you mean by accession? Accession means replacement plus the new positions, the new joinings. Are you clear with this? Anyone who enters for the first time into my organization, I call it as accession. That is not replacement. Replacement means if someone is entering new and they are filling a position which was already occupied by someone else, that was only called as replacement. Whereas accession is a broader term, not just that replacement, but it also takes into account the new positions that I have opened up currently. Clear with this, guys? This is the meaning. With this, you can easily figure this out. So now they have also given what? It's a reverse working. For a change, they have given all the ratios under the three methods, and one thing alone they have given. What is it? The number of replacements they have given. So now obviously you should start with the replacement method. The missing figure here is going to be the average number of workers. Now once you find out the average number of workers, denominator is that, the final ratio is that. Now the balancing figure is basically, it could be the number of replacements, the number of separations or number of accessions as the case may be. You can find out the missing figure. Clear with this, guys? Let us quickly see how they have done this. So replacement method, the formula is going to be number of replacements divided by average number of workers. So they have given that it's going to be what? 8% under the replacement method. 8 upon 100 is equal to number of replacement, 36 upon average number of workers. So now you just cross multiply. It's going to be how much? It's going to be, the average number of worker is going to be 36 upon 8 into 100. Correct, guys? It's a cross multiplication. It just goes here. So 36 into 100 divided by 8. Correct. So it's going to be how much? 450. So we got the denominator for all other formulas. Yes, it's going to be the average number of workers is going to be 450. Now, under the separation method, what is the formula? Number of separations divided by average number of workers. So we know that the labor turnover rate under the separation method is 6%, 6 upon 100 divided by, we just need to find out the number of separations because we now have the average number of workers. It's going to be the balancing figure. 450 into 6 upon 100, that's going to be 27. 27 is going to be the number of separations. Clear with this, guys? Yes, pretty much simple. And then finally, under the flux method, what is the formula? Number of separations plus accessions, that is the new joinings. Right? Now this is going to be 14%, right? And here the number of separations we just found out, it was how much? 27, right? Number of accession that we need to find out, the denominator we have it as 450. So you do the cross multiplication. So you get what? You get what? The number of accessions is going to be what? 36. Are you clear with this? So now the total number of people who have newly been recruited, that includes new joinings as well new positions as well as the replacements, that's going to be how much? 36. And what else have they asked? Number of separations, that's going to be 27. Are you clear with this? Pretty easy, guys. This is nothing in this sum, right? Just go and update your library of adjustments. This is about this question. Write down employee cost. So it's by the way, the type is going to be descriptive. The type is going to be descriptive. All the questions are numerical, that's why I didn't say numerical, it's descriptive. Put it as descriptive and write down employee cost is the name of the chapter. The concept is going to be labor turnover ratios within bracket reverse working. Labor turnover ratios within bracket reverse working. Labor turnover ratios within bracket reverse working. Fine, shall we move on to the next one? Right. So now the next question, this is under overheads. So I think this is the second sum that we are doing under overheads, right? Fine, one was the direct under or over absorption. Now this is a comprehensive machine hour rate sum. So let me quickly read out the question for you. From the details furnished below, you are required to compute the comprehensive machine hour rate. What do you mean by a comprehensive machine hour rate? It's nothing but the total overheads relating to the machine divided by the effective machine hours. You get the machine hour rate. Are you clear with this? As simple as that, right? So now what have they mentioned here? Original purchase price of the machine, which is subject to a 10% depreciation, a depreciation of 10% per annum, That's 12,96,000. 12,96,000 is the cost, right? Then the normal working hours for the month is 200 hours. However, the machine works only for 75% of the normal capacity. What is the meaning of this? What is the meaning of this? Now, generally speaking, there are 200 hours for which this machine's operator, machine will not run automatically. There has to be an operator who operates it, right? He comes to the factory for 200 hours. This is the meaning. However, obviously during the lunch time and all that, normal idle time will be there, correct? So during that time, will the machine be running? No, because he needs to stand in front of it or at least along with it. So only then it will be running. He needs to operate it. So that's why they are saying only 75% of the normal time will actually be the effective number of hours for which the machine is going to run. Are you clear with this? So clearly the denominator is what? 75% of 200, which is nothing but 150. Clear with this, guys? Any problem here? Fine. Wages to machine man is going to be how much? 800 rupees per day, and every day he has 8 hours. So basically what's the effective rate per hour? Come on, 800 upon 8. 100 rupees per hour is what I pay for the machine man. Then wages to the helper, right? Machine attendant. So how much is that? 500 rupees per day of 8 hours. So how much is that? It's going to be 62.5 per hour, right? Now, one second. So these are wages. Should they be considered for the purpose of calculating machine hour rate? Because in machine hour rate, what do? You only consider the overheads. Wages is a direct prime cost component, right? But in the numerator, you should only consider the indirect costs divided by the machine hours, correct? Should we consider these two? These are wages. Should we consider these two? Yes, and that's why it's called as comprehensive machine hour rate. Why? The logic is that, let me just give you a small example. Door manufacturing, wooden door manufacturing, right? There are two ways in which you can manufacture doors. One, you hire a carpenter. What this guy will do is, he will do all the carvings, he will do, he will make the design and all that. He needs to spend a lot of time on the, wood to convert it into a door, correct? Alternative number two, there is one mechanized way of manufacturing doors, right? What you will do is, you will have a machine, attached that there is one system, computer. You will have designs for that. So you will fix one design using some Adobe Photoshop or whatever it is. They have some specific designs, right? One enter click of a button, hundreds of doors will be manufactured with the same pattern. Now you tell me, this machine operator, he just spends 1 hour, parallelly 100 doors are getting manufactured. Now here whatever I pay him is also wages, but can I call it as a direct wage? No. Can I say for him he needs to spend 1 hour only, then every for me to produce one door I need to spend 1 hour? No, he can decide to keep the quantity as 50 or he can increase it to 100. The time will be the same. Clear? Whereas carpenter, it is completely direct. So basically what happens is, in heavily mechanized industries, the machine operator's wages, though it may seem direct, is ideally indirect, and if you include that, it is called as a comprehensive machine rate. This explanation is not there in the study material, but that is the meaning of that. Are you clear with this, guys? Right? So that is what it is all about. Hence this will come in your numerator. Clear with this? Done? Now the power cost of the month is given, supervision charges is given, electricity, lighting, fixed nature is given, repairs and maintenance, these figures are all given, insurance, other general expenses per annum, all these things need to be considered. Next. The workers are paid a fixed diurnus allowance of rupees 4,500 a month. The production bonus payable to the workers in terms of an award is equivalent to 10% of the basic wages and DA. Correct? So what you need to do is, there are two types of machine operators here. One is the actual how they call it, machine man. The other guy is a helper. Both of them have a basic wages. What is basic wages? Using this rate, you multiply with the hour, you get the basic wages. These guys will be paid for how many hours? 8 hours. No. In a month, 150 or 200? They will get paid for 200, right? Because lunch time and all this are unavoidable, right? So without some normal idle time, you can't work. Are you clear with this? This is similar to the concept of normal loss. In labor, the normal loss is called as normal idle time. Clear with this, right? So they will get paid for 200 hours, right? But when you are averaging out, I know that in the denominator, only if I make them work for 200, effectively I will get work that is worth 150 hours. Clear with the same concept here. It's all linked. Clear with this, guys? Fine. Now, apart from the basic, they are given a fixed DA of 4,500 a month. Over and above that, they have a production bonus that is equivalent to 10% of basic plus DA. That's what is given. And further over and above that, another 10%, add a 10% of basic and DA, again some leave, wages and holiday. The company has a policy. So basically there are two additions. The same figure of 10% gets added twice. One as a bonus, the other one as some compensation. Clear with this, guys? This is because it's given in the question. Clear with this? That's about it. To arrive at the comprehensive labor wage for the debit to production. Basically, this is what I said. It is considered as a part of your overheads. Are you clear with this? So now what do we do here? This sum is very simple. Take the numerator calculation, consider all the indirect machine related cost, you take it, divided by the effective machine hours, you will get the answer. Clear with this, guys? But presentation, you need to take care of it. They have segregated it into fixed and variable. That's about it. But for that, nothing great. Shall we quickly just discuss the solution here? Fine. The main catch here is with respect to calculating the these guys' wages, the machine man and helper. Clear with this, guys? And the word wages should not mislead you. Clear with this, right? Shall we get started? Yes. Now look at this. So in a month I have about 200 hours, right? And effectively these guys work only for 75% of that. So only for the hours for which they work, the machines will also run. Clear with this? Because without the operator sitting in front of the machines will not run. Clear with this? 150 hours, right? So our denominator is sorted. Guys, clear? Yeah, to arrive at the comprehensive machine hour rate. Fine. Now what have they done? They have segregated the cost into fixed and variable, right? Direct and fixed. This is what they have mentioned. If you want, you can use a similar word, fixed and variable. So will this change my answer? No. Anyways, everything gets added up, right? It's just a presentation, so take care of it. Clear with this? This is the expectation, because this is kind of straightforward, right? But there are certain things that you need to take care. In this case, the presentation is important. Clear with this, guys? Right? Now, so some students have asked, can I first put direct and then put in fixed? It's absolutely your choice. All those things, it's not like your financial account, schedule 3 and all. So top equity liability, no, we don't go by formats. Anything that is presentable is fine. Clear with this? Now guys, so now just line item wise, they have just added it up. So supervision charges per month, it is directly given 18,000. Please have the question with you. 18,000 directly available on a monthly basis. Then electricity lighting, is it fixed? Yes, 9,500 it is given. Insurance, it's given on a per annum 18,000. So here we are talking about per month. Clear? Divided by 12, you get 1,500. Yes, other general expenses, it's going to be 1,500. Now again, one common doubt between students. Sir, other general, it is AOH. Don't extend all that logic. Yeah, we are not preparing a cost sheet here. They have said they have apportioned some expenses pertaining to the machine. Do not worry about that. If it is given, take it. Clear with this? The same other general expenses, if it appears in a cost sheet question, you should classify it as administration overheads. Right? You are right. Don't extend that logic here. Clear with this? This is general expenses. You assume it relating to the machine. Clear with this, guys? Right? Then your depreciation is 12,96,000. That's the value into 10%. That's per annum divided by 12. Clear with this? That's going to be 10,800. So here comes your total fixed cost as a whole, right? So 41,300 divided by 150, how much you get? 275.33. Clear with this? Or you can finally add up everything and also put, but they are expecting this, let us honor it. Clear with this, guys? Fine. Idukala we should not lose marks, so let us do it. Next, direct cost. Repairs and maintenance is treated as a direct cost here. It's again a debatable issue. Is it direct or indirect? Technically speaking, it's a semi-variable cost, because to some extent it depends on the production. To some extent it is not directly linked to production also. So ideally it's you need to take a stand here. They have taken it as a direct cost or variable, but anyways it is not going to impact your answer. Right? It's just a classification. So what have they done? It's given in the question, no? Figure. Yeah, this figure is given 17,500, and all the variable components then and there they have actually calculated the hourly rates. Clear with this? So do this 17,500 divided by 150. How much is that? So 116.67. Then what's the power cost? This is clearly a variable one. So 1,30,000 once again divided by 150. How much is that? 866.67. Right? Then that's about whatever the cost given in the table. Now you have the wages of these two guys, the machine man and helper. That's where the working note comes to your resume. Fine, we will be doing it, right? And finally, whatever you get divided by, or you can just add it up, since everything is on an hourly rate, you will get the final comprehensive machine hour rate. Now we just need to do these two figures. Yes, guys, right? Shall we start? Now, what happens? Machine man and helper, they have done it like this, an alternative way of doing. Machine man, he works for how many hours in a month? 200 hours a month, right? And every hour he gets paid how much? He gets paid how much? 100 rupees. How did he arrive at 100? 800 upon 8. Correct? So how much is it? 20,000. That way also you can do. Or have they given anywhere it's 25 days a month? Have they given anywhere? It's okay, I don't know why they have done it like that. Anyways, this way you do, it's always, this is a safe method. Similarly, this guy helper. So how many hours he works? He also works for 200 hours. Okay, 200 into, you want to do 800 upon 8? 200 hours? Oh, right, okay, that's how they have done it. Fine, okay, that way also you can do 200 hours in a month divided by 8 hours a day. Fine, anyways, it's all the same, right? If you want, you can do it in this methodology also, or this anyways going by an hourly rate is always safe for us, right? Clear with this. Now, here it's going to be how much? The 62.5 per hour. So it's going to be into 62.5. How much is that? So 200 into 62.5, that's going to be 12,500, right? This is sorted. Fine. Then your DA is fixed. They have given in the question, right? 4545. So basic plus DA is going to be how much? These two figures. Clear with this, guys. I am not focused so much on the calculation. It's just a process given. We need to understand how we have arrived at these figures, right? Then you have a bonus of 10% on this, right? So it's going to be 2450 and 1700. Clear? And once again, they are asking you to add this for leave wages. The same figure gets repeated once again. Clear with this, right? So the total wages that you pay to the two guys are, it's 29,400 and 2,400, right? So effective hourly costs of this, who is this guy? Machine man is going to be 29,400 divided by 150. How much is that? 196. For this guy, it's going to be 2,400 divided by 150. How much is that? 136. Just populate these two figures on the topmost table. Are you clear with this? This is what they have done. They have just added everything and arrived at the comprehensive machine hour rate. Clear with this, guys? Simple and straightforward. Any issues here? It's a vanilla sum. Nothing there. Nothing great here. It's a plain question. Clear with this? Right? Fine. And that's about this particular question. Is there anything else they've asked for? I think that's about it. Fine, guys. Right? Shall we just go and update our library of adjustments? Right? Let's do this. Write down. Question number 9, it's descriptive again. It's descriptive. Write down. Chapter is overheads and concept is going to be comprehensive machine hour rate. It's going to be comprehensive machine hour rate. Comprehensive machine hour rate. Semicolon. Wages of machine man and worker. Helper. Wages of machine man and helper. One look at this the day before your exam, you should be able to recollect whatever adjustments that we did. In this sum, there is not much of adjustments, right? But yes, are you clear with this, guys? This library of adjustment is a lifesaver. Just imagine for every single sum that you had done till now, whatever is in whatever subjects that you have prepared, if you have collected this, just see how helpful it will be the day before your exam, right? Easily you can revise the entire subject 4 or 5 times. I'm not kidding. If you have this kind of a note taking, you can easily recollect, can easily recapitulate everything 4 or 5 times. Clear with this? Time is of so essence, right? If you have this note taking habit, it will save you in the long run. Now I'm not kidding. 10 years back, whatever notes that I took when I was a student, I still preserve those notes, and I mean, if I can still visualize like which corner of the page I would have scribbled something. That is the power of note taking, guys, right? All this printed format, it's always printed, fine, but you can actually visualize and relive the classroom moment only if you're taking really good notes. And what is good for you might not be good for another person, that's fine, right? But at least you should be able to recollect. That's the best part of note taking. Fine. So now shall we move to the next one?
Yes, sir.
Guys, yes.
Yes, sir.
What, are you so hungry? Fine. Yes, sir. Still it's okay. Let's do the next one. Okay. I'll give you a break. Don't worry. Okay. Fine, guys. The next question is regarding ABC. Guys, yes. What happened? It's boring, huh? So let's do this, guys. I'm telling you, it's going to be about 15-20 marks easily. Straight lift from here. It will definitely be a lifesaver. So please bear with me on this. There are so many interesting adjustments, and in this sum, there is also one very interesting calculation as well. Okay, so let's do this. Soft Hug is a global brand created by Green Lush Limited. The company manufactures 3 ranges of beauty soaps: gold, pearl, and diamond. Right? The budgeted cost and the production for the month of May 2024 are as follows, and they are given in the question. So the total number of, the company basically deals in some soap manufacturing, beauty soap, something like, you know, your P&G or Unilever type of thing, right? They have 3 different types of soaps: gold, pearl, and diamond, right? The number of units of each of these products are given: 4,000, 3,000, and 2,000, right? Now look what they have given. For me to produce every unit of each of these 3 types of products, what are all the resources required, right? What are all the resources required? It requires 4 types of material and 1 type of labor. Clear with this, right? This is what they have given. For example, Soft Hug Gold, right? Gold, that is, gold is a type of soap. It requires 60 ml of some essential oil, 20 grams of cocoa butter, 30 ml of filtered water, and 10 grams of chemical, right? So these are all what? Raw materials. And the rate per unit of these raw materials are also given here. Clear with this, right? Similarly, they have given it for each of the 3 different products the company deals in, right? Now, ABC sums are of that sort. ABC is a very, you know, straightforward area. The only issue is it requires a lot of data to be given, and hence the sums will look lengthy, right? Don't think that, you know, it's difficult. Right? You should have the mental energy to at least go through the full sum, only to realize that more the data which is given, lesser is the data that is required to be found out. Clear with this, right? So don't come to a conclusion that big sums are difficult, nothing of that sort. Fine. So here, product wise, what is the different 4 types of raw material, what is the ingredient required, rate is given, and of course the direct labor is also given. So per unit, for me to produce 1 unit of gold, it requires 30 minutes. 30 minutes is equal to how many hours? Half an hour, 0.5 hours. How do you get this? 30 upon 60, right? And every hour of labor that I use is going to, I incur a cost of 10 rupees per hour. Clear with this, guys? Fine. Now, the Green Lush Limited follows an absorption costing system and absorbed its production overheads to its product using direct labor or rate, which were budgeted at 1,98,000. So 1,98,000 is what? It is the budgeted overheads, right? And what the company is currently doing, they are saying absorption rate is a direct rate. They are charging of this, this entire overheads to the products using a blanket rate of direct labor hours. Clear with this, right? Clear with this, guys? So is the direct labor hours given in the question? No, not directly, but can it be found out? Yes. Per unit, what is the labor hour I need? I have the total number of units. Marry the 2, multiply the 2 figures, you get it. Clear with this, you get the total labor hours. Fine, divide. So you get this 1,98,000 divided by the total labor hours, you get the absorption rate per labor hour, and you can just charge it off. Clear with this. Is it a good way of absorbing? Is it a good way of charging overheads to the product? No, it's not a good way. Reason is that no, not all the components of this overheads are driven by what? By your labor, your direct labor. So what you need to do is, that's where ABC comes in and says, look, your starting point and ending point of your traditional overhead costing is correct. What is the starting point? You have bulk indirect cost figures. And what is the ending point? You need to convert them into a per unit level. Why? Only then you can arrive at the cost per unit, and then you can go on, life will go ahead, right? You can value stocks. The problem is only with the approach. What ABC comes and says is, don't directly use some, some blanket rate and all. Break this costs and classify them into activity. Every activity will be driven by its own cost driver. Take that as the base to apportion. This is all ABC says. That's why it's called as activity based costing. Clear with this, right? So now don't tell me this 1,98,000. Break it up and tell me what are the activity costs. They call it as cost pools. What are the activity cost pools for which you have incurred this 1,98,000? So now that's why they're saying Green Lush Limited is considering adopting an ABC system. For this, additional information is given as follows. Forklifting cost 58,000, supervising cost 60,000, utility cost 80,000. Add up, how much you get? 1,98,000. Basically, what have they given? The breakup for this. And they are saying forklifting. What do you mean by forklifting? inside a factory, there will be one small vehicle, right? It has some two horn kind of things. It will just lift and put it in a different place. That's called as forklifting. So they are saying this forklifting activity is driven by the weight of material lifted. Supervising cost is driven by labor hours. Utility cost is driven by number of machine operations. The number of machine operations per unit are 5, 5 and 6 for each of the 3 products, right? So total number of machine operations, respective machine operations per unit, multiply the number of units, you will get it. Clear with this? Right? So you can get the cost driver quantity for this particular activity, correct? Labor hours, can you get it? Yes. Per unit you have what is the labor hour required and multiply it with what? The total labor hours, done. Now weight of material lifted, how will you get it? Now some units of measure are in ml, some units of measure are in gram. How can you do it? That's why you just keep reading the questions, they will get. Consider the mass of 1 liter of essential oil and filtered water as equivalent to 0.8 kg and 1 kg respectively. Meaning what? Meaning what? If it is 1 ml of essential oil, consider it as 0.8 grams. If it is 1 ml of filtered water, consider it as 1 gram. Simple. 1 ml is 1 gram, 1 liter is 1 kg. They have given, look at this. They have given 1 liter of whatever it is equal to 1 kg. Okay, fine. 0.8 kg for essential oils. Okay, fine. So let me tell you, essential oils is there, right? If we are talking about 1 liter of essential oil, consider it as 1 liter. So 0.8 kg means 800 grams. Correct? Guys, correct? Suppose if it is 1 ml of essential oil, consider it as 0.8 grams. 80% of that. Apply 80% of whatever it is, you will get it. Are you clear with this? Any problem here? Any problem here? You guys still look confused. What has happened? What has happened? Not convinced. Can you tell me what is the issue here? Are you able to understand? Filtered water, okay, I will come to that. Filtered water, if it is 1 liter of filtered water, consider it as 1 kg itself or 1000 grams, right? If it is going to be 1 ml of filtered water, consider it as 1 gram. That's all, no? 80% of whatever it is. Are you clear with this? That is for essential oil. Here it is 1, that's all. Are you clear with this, guys? Why is it so? See, if you are having 100 ml, if there is a water bottle of, let's say, 1 liter bottle, if you pour water, the density is different, right? And if you pour oil, the density is completely different. If you pour oil in the same bottle, the weight will be much more. Clear, guys? So this is all based on density. That's why let's not get too technical. We are not doing physics here, right? They have given something. Let's use a unit of measure for conversions. Clear with this, guys? Any doubts here? Right? It's very simple. Don't worry about the mass salam paatha odne. Oh my God, this is not for me. It's nothing, guys. Nothing. Okay, clear with this. Now what have they asked here? Now you are required to prepare a statement showing the unit cost and the total cost for each of the product using absorption costing. Then you do the same under ABC and state what are the reasons for the different product cost under the two approaches. Guys, fairly simple, right? Now we spent so much time in breaking down the entire question into multiple components. The approach was also framed. Now shall we just quickly discuss what is the solution, right? Now look at this. First, under the traditional costing system, what happens here? 1 second. Yes. So under the traditional costing system, now what happens here is, so first, what are the number of units produced? Please have the question with you. The number of units produced is 4,000 units, 3,000 units and 2,000 units, right? Right. So as a representative figure, they have put it as 9,000. Very strictly speaking, you can't add dissimilar items, right? Now they have mentioned that the direct labor required for every unit is 30 minutes, 40 minutes and 60 minutes. This figure is also given. The total direct labor, or in other words, is 30 minutes is equal to 0.5 hours. 40 minutes is equal to 0.6 hours. And here it's going to be 60 upon 60, 1 hour. Multiply the two. So the total direct labor hour is going to be 4,000 into 0.5, 2,000 hours. 3,000 into 0.6, how much is that? 2,000 hours, 2,000 into 1, 2,000 hours. Add up, you get 6,000. So a total of 6,000 labor hours were utilized. right? And if you were to follow a blanket rate, what is going to be the absorption rate for you? So the budgeted overheads divided by the budgeted labor hours. So for every hour you spend, you're supposed to charge the products with 33 rupees of indirect labor. Clear with this, guys? I mean indirect cost. Are you clear with this? Overheads, right? So now under this method, if you do, so what you will get, so they are trying to calculate the total unit cost. Total unit cost is what? Material, labor, plus now the apportioned overheads under the traditional costing system. Correct? Clear with this? So now what is going to be my labor cost? Labor cost they have given, it is going to be 10 rupees per hour, and every unit of gold requires only 30 minutes. So 10 into 30 upon 60, 5 rupees is the cost. Here it's going to be 10 into 40 upon 60, 6.67, 10 into 60 upon 60, it's going to be 10, right? Labor cost on a per unit level, it's readily available, right? Direct material cost per unit of each of the product. Again, they have given what is the quantity of each component requires. Rate is also given, just multiply the two, right? So here, look at this, the working note is given here. So I'm just doing one line. Relatively, it's going to be the same for the other two. So here, for soft hug, the gold component, that is the gold product, if you see they have given essential oil 60 ml is required, right? And they have given the rate for essential oil is 200 rupees for 100 ml. So if 200 is the cost for 100 ml, how much is it for 60? And I need 60 ml to produce 1 unit of gold. Clear with this? It's going to be 120. Similar calculation for cocoa butter. They have given if 200 is for 100 grams, how much is it for 20 grams? Similarly for here, 15 rupees is for 100 ml, how much is it for 30? And here if 30 rupees that is for 100 grams, how much is it for 10 grams? Like this they have computed and they have arrived at the material cost per unit of each of the product. Are you clear with this? Any problem here? Now this and the labor cost per unit will not change whether I am following ABC or traditional. Why? Because these two systems are pertaining to indirect cost. Clear with this? These two are prime cost components. Are you clear with this? It's a one-time working note that you need to do. Clear with this, guys? And they have just populated the figures here. They have just populated these two figures here. Clear with this, guys? Labor, material will be the same. It will not change based on the method that I follow. Right? Fine. Let's go to the next one. Production overheads. Now it's fairly simple. This way it's fairly simple. What is it? So it's going to be 33 rupees. How do you get 33? Just now we calculated for every hour used, right? So it's going to be 33 for every hour, right? So every unit of gold requires only 30 minutes. So 33 into 30 upon 60, 33 into 40 upon 60, 33 into 60 upon 60. You have apportioned, you have arrived at the total per unit cost, material, labor, overheads put together, multiply it with the number of units produced, you get the total cost apportioned. Clear with this? This is fairly simple, right? Fine. Shall we move on to the next one? Now comes the real deal, which is your ABC, right? Now, when you are following ABC approach, now what have they given? They have broken up the entire overhead cost into three. There are three activities, right? There are three activities: forklifting, supervising, and utility. Each of these three, this is actually called as cost pool. This is called as cost pool. This is actually called as cost driver. And the number of cost driver is called as cost driver quantity, right? So in overheads, what we call as base quantity, here we call as cost driver quantity, right? In overheads, what we call as the base quantity, yeah, that's what is called as cost driver quantity. Here in overheads, what we call as departments, here is called as activities, and the departmental overheads are here called as cost pool. That's all. It's like old wine in a new bottle. Everything is same, just the approach is slightly different and the wordings are slightly different. What is called as absorption rate, that is here called as cost driver rate, and as simple as that. Clear with this? But everything is logically apportioned here. Now first, what do I need to do? I need to apportion the forklifting cost. Forklifting cost is apportioned on the basis of weight of material lifted. So I need to know what is the total weight that is being handled for every unit of gold and what silver, diamond, a pearl and a diamond, right? Fine. So here what do we do? Now look at this. For soft hug, that is gold, right? What have they mentioned? We use four different types of products, right? We use four different types of raw material. So what are they? The first one is essential oil. 60 ml is used, correct, guys? But they have given in the question how to convert that ml into liter if we are talking about essential oil that has a mass of only 0.8. Are you clear with this? So what they have done, 60 into 0.8 if I do, that is the equivalent grams for 60 ml of essential oil. Clear with this? Next you have cocoa butter, it's already in grams, no problem, 20 grams, add it. Guys, clear with this? Yes, for every unit of gold, what is the weight handled? I am trying to figure out. Why do we need this? It is one of the cost driver quantities, correct? Because for me to apportion my forklifting cost, I need to know what is the total weight handled for every different type of product. Are you clear with this, guys? Are you all able to understand? This is fine. Next, filtered water, ideally this is what? 30 ml into 1. Why? The 1 is the conversion rate that they have given. Yes, are you clear with this? Right? And this 10 is already in grams. 10 grams is of chemicals. So these figures I am taking from here. These figures I am taking from here. Are you clear with this? Yes, are you clear with this? This I multiplied with 0.8. This I multiplied with 1. Why? Given in the question. Clear with this, guys? Right? Don't just think that it is all difficult if they have given some mass and all. It's nothing. Clear with this? Fine. Similar calculation they have done for pearl and diamond also. Clear with this, guys? Any problem here? No. So what is the total weight handle? Per unit, I am handling 108 grams for gold, 106 grams for pearl, 117 grams for diamond. Multiplied with the respective units, you get the total weight handle pertaining to gold, pearl, diamond. So the total weight handle is going to be 9,84,000 grams. Clear with this, guys? This is the weight handled by what? The forklift truck, the forklifts. Right? So if at all I am apportioning that cost, it should be in this ratio. Clear with this? Fine. Now similarly, direct labor, we all know it's in minutes, 30, 40 and 60 respectively. So you can multiply 4,000 into 30 upon 60, 3,000 into 40 upon 60, 2,000 into 60 upon 60. I think we've already done this, right? So the total labor hours is going to be 6,000. Clear with this? This is going to be the cost driver quantity for what? Cost driver quantity for that other cost. What is the second one? Supervisor cost, supervising cost. Clear with this, guys? Right? The next one is utility, that is driven by machine operations. Machine operation is given on a per unit level. Multiply it with what? The number of units. How many units? Into 4,000 units, into 3,000 units, into 2,000 units. Right? You multiply it. How much is it? 4 into 5 is 20, 3 into 5 is 15, 6 into 2 is 12. Add up. So total of 47,000 machine operations have happened, and that's how I'm going to do it. Right? So now we can arrive at the cost driver rates. The cost driver rates, these are nothing but the equivalent of absorption rates. Correct? Under ABC. Right? So what is going to be my cost driver rate? Forklifting cost is going to be 58,000. That needs to be apportioned between 9,84,000 gram. So per gram handled, I should give it a share of how much? 0.06. Clear with this, guys? Right? Similarly, supervising is going to be how much? It's going to be 60,000. That 60,000 is a cost pool divided by the cost driver quantity of 6,000 per hour. I'm going to give it a share of 10 rupees of supervising cost. And how about your utility rate? It's going to be how much? 80,000. That's the cost pool given in the question, divided by 47,000. So 1.70 per machine hours. Clear with this, guys? So now what we can do is, under ABC, what is going to be the unit cost? Material labor remains intact. It will not change. Prime cost components will remain the same. Now overheads, I need to bifurcate it into 3. Forklift, your supervising, and utilities. Forklift, for every gram handled, I should give it a share of how much? 0.06, 0.06, 0.06. Irrespective of which product, for 1 gram handled, give it a share of 0.06. But every unit of gold handles how many grams of, what is the weight that is being handled? 108, here it's 106, here it's 117. Just multiply these 3 figures, 108, 106, 117. Per unit share of forklifting cost is being arrived at. Clear with this, guys? Similarly, for me, supervising is going to be 10 rupees per labor hour. Multiply it with the labor hours taken on a per unit level. 10 into 30 by 60, 10 into 40 by 60, 10 into 60 by 60. You get these rates. Clear with this? And here, utilities, what is the cost per machine hour? Machine operation, 1.7, and the figures are readily available. They have given 5, 5 and 6. Multiply it, you get this. Add it up, you get the total cost per unit under ABC. Multiply it with the respective units, you get the total cost. Clear with this, guys? Fine. And now they have also asked you to comment on this. State what are the reasons for the different product costs under the 2 approaches. Obviously, the approach has changed. That's all. The difference in total cost of the 2 systems is due to the differences in the overheads borne by each of the products. Obviously, the reason why they are asking this, sir, isn't it apparent? See, what they are asking here is the change is not due to prime cost components. It is due to the manner of apportioning your overheads. Are you clear with this? This is what they are asking in this question. That's about it, right? The ABC appears to be more precise, and this is all they are asking for. It's a very logical way of answering. Clear with this, guys? This is all is being tested. Now you tell me, is it difficult? No, but on the face, when we solve this mass conversion and all, just imagine, visualize you are sitting in the exam hall, 15 minutes reading time, you go through this question, immediately mass is equal to, you read this, what will you do? You will straight away omit this question, and actually this question would have been a lifesaver for you, right? Don't come to that conclusion very immediately, right? Are you clear with this? Are you clear with this? More about exam preparation, the exam strategy, I will tell you towards the end, fine, which we'll keep it as another separate session. But yes, are you guys clear with this, guys? This is all about ABC, and this is like one masterpiece of generally traditional costing versus ABC is how these questions are being tested. Fine. So just go and update your library of adjustments. Any doubts in this question? No, right? Just go and update your library of adjustments. Right now. Right now. Question number 10, descriptive ABC. And write down ABC versus TCS. TCS is traditional costing system or traditional overheads absorption system. You can use any which ways. ABC versus TCS, all this library of adjustments for your understanding. ABC versus TCS, semicolon, mass conversion. That is nothing actually, but anyways, mass conversion and semicolon, comments. Generally students avoid this comment or they don't know what to write. Here just understand the essence of it. The difference is not because of prime cost, it is because of overheads. That is what they are expecting. Clear? Right? But when you read it, you will say, idella theriyada. So what is the big thing they are writing? What they are trying to test is it is not because of prime cost. Clear with this, guys? Right? That's about it. That's about it. Fine? Cool. Then let's move to the next one. Cost sheet. This again is a straightforward question. Okay. So before that, sorry. Before that, quickly, shall we revise the format of cost sheet? Huh? Yes, sir. Fine. Fine. I'm just going to scribble whatever you guys are telling me. So fine. So cost sheet basically direct material. So how do you arrive at the direct material? Opening stock of raw material, add purchases. Wait. When it comes to purchases, freight inwards, right? All those question number 1 components will come in. Right? Right? That is just one aspect of cost sheet. LCU, Maida, universe, it's all linked. Okay, right? So fine, guys. Plus purchases minus closing stock of raw material gives you what? Direct material consumed, add direct labor, direct expense, you call it as prime cost, add POH, gross factory cost, gross works cost. Why is it called gross? Adjust for WIP. Very good. Add opening WIP less closing WIP. Call it as net factory cost, simply factory cost, whatever it is. Then now there are 4 addition, 1 deletions, right? So ideally speaking, these are a part of POH only, right? But institute wants you to display it on the face of the cost sheet. Clear with this? Because these are also indirect manufacturing costs. In a factory, there can only be prime cost components and POH. But institute wants you to display it on the face of your cost sheet. Clear with this, guys? Which institute? CA Institute. Don't think that because no. Why I'm saying this? The reason why I'm saying this is overheads you are doing, the manner of under absorption, over absorption, that is prescribed by CMA Institute in something called as cost accounting standards. That needs to be followed by everyone. But the same cost accounting standard has not prescribed the format of cost sheet. So if you are a CA student, the format of cost sheet will be different. If you are a CMA student, the format of cost sheet will be different. That's why I'm saying. Clear with this, right? So now, so from this, what are the 4 additions? Very good. Quality control costs, research and development cost, primary packing, administrative cost related to production. What do you mean by that? In the factory, there will be one plant head. He will be working only for the factory, not for the entire company. General administration overheads, board of directors. Plant head, in the factory, he will be sitting in an AC room. Right? That guy will come here. Whereas there is a supervisor. He will be standing on the floor, but he will not be putting his hands on the machine and working. He will just supervise, but he will be standing not in an AC hall. That guy's salary will come under POH. Whereas the person who actually works, that guy's salary, wages will come under direct labor. There are 3 different hierarchies here inside the factory itself. Clear with this? Clear with this? Right? So production control manager's salary will come under administration overheads related to production. Clear with this, guys? Right? These are adjustments that are there in your cost sheet chapter. Right? So what did I write even I didn't understand? Oh, this is primary. Okay, primary packing cost, right? And then yes, administration overheads related to production, right? Related to production, very good. And then yes, you have minus credit for recoveries, as they call it. That's nothing but your scrap income, right? You reduce that, you get what? You get what? Cost of production. You get your cost of production. To this, what do? Add your opening FG minus your closing FG. You get your COGS, cost of goods sold. To this, add your AOH. This is general. This is the corporate office expense, right? Your accountant salary, board of directors salary. These guys are not present in the factory. So the nature of expense depends on the location where you're incurring it. That's how cost sheet works. No rocket science. Very simple. Don't mug up. Clear with this. Add up. Selling and distribution, SOH as we call it, or SND, whatever it is. You get your cost of sales, you add your profit, you get your sales. As simple as that. Clear with this. Nothing needs to be mugged up. And ideally, in my regular batch, I introduce this using something called as a flow of cost. How the cost flows. And with that, you can clearly understand every single component, why it's being added, subtracted and all. But yes, since this is an RTP discussion, I am just confining myself to this format of cost sheet. You guys are clear with this? Right? Now let's go here and crack this sum. From the following data of Apple Limited, calculate the material consumed, prime cost and the cost of production. These are the 3 things that they've asked for, right? And by the way, guys, in this question, they have not prepared this cost sheet in a very proper structured format and all. They have just asked for these 3 components they have calculated. That's all. Clear with this? Fine. But if you are doing it, you do it in the same manner of cost sheet, because we don't know. At times there are inconsistencies. The same sum, if it comes to the next RTP, institute might do it slightly different in terms of presentation. Answer might not change. So let's do it safely. Let's follow only one approach. List of all the items mentioned. Now, okay, let's do this, guys. Let's do this. So as and when I read out an item, you tell me where it needs to get classified. Clear? Right? Let's do it that way and close it off. Fine. The first one, repairs and maintenance paid for plant and machinery. Oh, what overheads? There are 3 types of overheads. Okay, production overheads. Insurance premium paid for inventories. Production overheads or material cost? How many of you say material cost? How many of you say material cost? Up. How many of you say it's POH? Oh, so how many of you say no comments? So this comes only under POH. Yes, it comes under POH. See, this is not a cost you incur to bring it to your present location. Having brought it, you need to maintain. That's about it. Clear? Fine. So it comes only under POH, right? One more item. Wait, it's not here. I'm bringing it up. Material handling costs. Material handling costs. Always production overheads. Why? There is a stores here. There is a factory shop here. From stores, I am issuing it to factory shop using this forklift truck only. That is not related to your raw material. Inside material handling, since you find the word material, don't jump to the conclusion saying that it is going to be what? It's going to be your material cost. No. Next, your interest. It's a non-operating item. Non-operating item. Guys, clear with this. Interest should never form part of your cost sheet because it's not a part of costing itself. FM it will come. EBIT minus interest. Costing reports only EBIT and it stops there. From interest, FM begins from where costing is left. Clear with this. 6A starts from 4. Clear with this, guys. Paper 6A starts from paper 4. That's what I was saying. Okay. Next. Bank charges. Bank charges. Bank charges. AOH. Now, I will tell you why. That's the reason why I first asked interest And then I asked bank charges and you also fell for it. This adjustment is there in your study material. I don't know how many of you saw this. Interest is for borrowings. I'll tell you what was your line of thinking. Immediately I asked bank charges. Bank is a financial institution, so it is related to borrowing. Who said? You have a current account. For maintaining the current account every year they charge some IMC charges. That is administration related. Who said bank charges are always related to your borrowings? Guys, are you clear with this? Note it down somewhere. Bank charges are AOH. Clear with this? Guys, are you all clear with this? It is there as one of the adjustments in your study material. Right? Yarla regular batch attend panni ippo narabu marubadiyum vandiya seri okay. Okay, fine guys, please note it down somewhere. It's going to be AOH. Clear with this? Interest, bad debts. Bad debts. The confusion is bad debts. Some people think it's SOH. No. It is always a non-operating item only, because some people think it's a sales I didn't recover. It is a post-sale item. If you know you are going to have a bad debt, you will not even sell it in the first place. Correct? Right? It is not a selling related expense. It shows your inefficiency to recover. Clear? It has nothing to do with costing. These are all non-operating items. Fine, I just brought it up. That's all, guys. Fine. So this is going to be POH, is what I said. Yes, insurance premium is going to be POH. Raw material purchase, separate line item. Opening, closing stock, separate line item. Wages, separate line item. Opening and closing value of inventory, separate line item. Quality control costs, separate line item. R&D, separate line item. Admin costs related to factory and production, separate line item. Others is going to be POH. Right? And amount realized by selling scrap, separate line item. Sorry guys, my bad. It's AOH, sorry, it's gender. Sorry, my bad. Right? AOH. Then amount realized by selling scrap generated during the manufacturing process, separate line item. Now, packing cost necessary to preserve the goods for further processing. So, primary packing is a separate line item. Secondary, it is necessary, it is a necessity. They are saying it is necessary for further processing. The word here is necessary. So, okay, let me give you an example. Wait. I generally give this example once again in our regular lectures and people laugh for it. Okay, let's assume we are talking about Coca-Cola. Right? What this company, we already started laughing. Okay, so what this company does is they are in the business of manufacturing Coca-Cola. I should say Coca-Cola fully, I should not say Coke also. Coca-Cola, right? Now, what these guys do is, so if you want to consume Coke, what can you do? Obviously, it needs to be bottled. Can you go there and say, you pour, I will drink? So, it's a very basic necessity for you to actually, that packing that bottle comes under the primary packing cost. But when they are subsequently selling it in the crates, these are required for transportation. This comes under secondary packing, or when they are putting it under that that cardboard box and all that. Clear with this, right? So bottle here is a primary packing. Here they have mentioned it as necessary, right? It is a necessity, and hence this comes under the separate line item. Ideally a part of POH that comes separately, right? And salary paid to director. Salary paid to director comes under what? Obviously it comes under AOH, right? They have just mentioned director, right? It's not plant head and all. Are you clear with this? So based on this, you can prepare this classification, arrive at the raw material consumed, prime cost and COP. And just look at this. What have they done? Raw material purchase, adjust for opening and closing, you get material consumed. Was it one of the things they asked for in the question? Material consumed they had asked for? Yes, right? So that is done. Then add wages, you get prime cost. Now ideally speaking, they should have maintained that order, right? So what have they asked in the question? Prime cost was also asked, right? After this, whatever you add, you will get only finally your cost of production, but certain things need to be excluded. So what they did, repairs and maintenance of cost and pertaining to plant and machinery, insurance premium of inventories, plant and machinery. Ideally, these three things should have clubbed under POH, right? So add POH, you get what? Your gross factory cost, adjust for opening and closing WIP. In this case, there is nothing there. So your gross factory cost also becomes your net factory, all bypass only, right? And now what happens? 4 addition, 1 deletion. Now that is where these items come into picture. Quality control, research and development, admin costs and all that, right? They have just added everything. Oh, now they have adjusted for closing, opening and closing WIP. Guys, what I would suggest is you just retain whatever format that we have done, right? The original format, because this format is there in ICA study material only, right? In some just because they are deviating, let's not deviate. because tomorrow they will deviate differently, then you can't follow it, right? You just follow the same format. Ideally, the answer won't change, right? And finally, they have reduced the credit for recoveries. They have also added what? They have mentioned it as what? Primary packing cost. So the key here is necessary. So the word they have mentioned as necessary, you do it here. Clear with this, you get your cost of production and the notes here. And by the way, guys, remember one thing: if you are ignoring a line item, you need to mention why you are ignoring it. Clear? If you ignore it, then institute will also ignore your marks. Don't do that. If you are ignoring a line item, exclusions need to come with explanations. Clear with this, guys, right? Always remember this. If you are excluding something, write a note. So other admin overheads does not form part of the cost of production, and salary paid to technical director is admin cost. Clear? Done. That's about it. Fine. Shall we just go and update our library of adjustments? Fairly a simple sum. Write down. Write down. Question number 11. Descriptive cost sheet. Descriptive cost sheet. Write down. Material consumed semicolon prime cost semicolon COP, cost of production. Material consumed semicolon prime cost semicolon cost of production. Then of the lot, which one you found confusing? Huh? Nothing. Okay, primary. So okay, write down primary packing costs. That was one item some students felt maybe little difficult. There was also confusion regarding insurance premium for inventories. Maybe you just write down that also. Insurance premium relating to inventories, right? If possible, take a red ink and write down the bank charges that I told you. That was not there in the question. Maybe you can just put it somewhere near that, so that it is relating to cost sheet. Done. Let's go on to the next question, number 12, which is a question on cost accounting systems. Right, just give me a minute. One sec. Hello, hello. Okay. So now, this is a question on cost accounting system, wherein this is relating to your reconciliation between costing records and your financial records, right? So just to give you a background, in our subject costing, the profit that we report is operating profit, right? Which is basically your EBIT, operating profit. Whereas in your financial accounts, the profit that we report is our net profit, that is the final profit after tax. Clear with this? Hence, there are a few differences. There are differences in the profits reported under our cost accounting and under financial accounting. Fine. So predominantly, it is because of inclusion of non-operating items in your financial accounting. For example, rent received, dividend received, or the bad debts that we considered in the expense side. These are items that are considered in financial accounting, whereas in our cost sheet, have we seen these items? The only source of income is going to be our revenue from operations, which is our sales. Okay, that's why the profit reported under costing is going to be your operating profit. Clear with this, guys? Fine. This is predominantly the difference. This shows the difference between your profit reported under the two accounts, the two systems of accounts. Now, another thing is with respect to your treatment of overheads when it comes to your costing. In costing, what we have is the concept of absorption, right? Guys, yes. We have the concept of absorption, and the figure that hits my cost sheet is going to be what? Absorbed overheads. Correct, guys? Yes, sir. Right? So what do you mean by absorbed overheads? You use a predetermined rate applied on the actual base quantity and arrive at a figure. The reason is we all know costing can't wait till year end, so this is the way to do. Whereas in your financial accounts, the debit item when it comes to overheads that we consider is the actual overheads itself. There is no concept of absorption and all when it comes to financial accounts. Only in cost accounts we have this problem. In financial accounts we don't have this. Agreeing with me on this or not? Yes, right? So this is a reason for reconciliation. Correct, guys? Yes, sir. Right? Yes? Yes, sir. Technically no. Because at the end of the year, you do something called as under or over absorption. Yes. You compare the absorbed with actual, match it, no? Then costing is also now actual only. Guys, correct? Correct. Then how could this be a reconciling item? Right? I'm just giving you an overview. There are three ways in which you can deal with under or over absorption. I'm giving you a bird's eye view here. It's a very detailed and intricate discussion. If you want catch up running notes, there are three ways in which you can deal with under or over absorption. One is to treat it fully as period cost, right? The other one is to treat it as product cost using something called as supplementary rates, right? This is ideally a part of your overheads chapter. And the third method is do nothing. Don't do anything. The under or over absorption gets carried forward in the ledger itself, in the overhead ledger itself. Are you clear with this? Are you clear with this? Is that a good method? Is that a good method? Yes, and there is a reason for that, right? Yes, it is a good method. Wait, I'll tell you, it's a good method basically, because what they are saying is, if there is an under or over absorption, now if there is an under absorption in the current year, ideally speaking, if you have done everything right, it should get offset in the next year by way of an over absorption. Sir, if it does not happen, if the balance keeps on accumulating, this method comes and says there is something serious problem with your budgeting skills. There is no problem with the methodology. So that is why this method of carrying forward the balance is also a good method. And why am I saying all this? Throughout this chapter alone, cost accounting system chapter alone, Institute takes a stand. They are not giving you assumptions. They takes a stand that all companies follow third method for the purpose of reconciliation. Why? Only then this will be a reconciling item, no? Guys, are you clear with this? Are you all clear with this? Hence, for the purpose of this chapter, always overheads will be what? It is going to be a reconciling item. Clear with this? This is the logical understanding to this particular portion. Are you all clear with this? Are you all clear with this? So broadly, there are three ways of dealing with this, and Institute has not mentioned all this clearly on the study material. Directly, they have taken this stand. That's the reason why in your cost ledgers also, in some sums, if you see the opening trial balance, you will be having production overheads account will be having an opening balance. It's an expense ledger. How can it have? They are following the third methodology. Are you now able to connect the dots? Are you now able to connect the dots? This is also a good system which is being followed in India, which is allowed in the cost accounting standards prescribed by the CMA Institute. Are you clear with this, guys? Right? On that note, let us get started with this particular numerical problem. Clear? Shall we get started? Right? Fine. So now a manufacturing company disclosed a net loss of rupees 3,47,000 as per their cost accounts. For the year ended 31st of March, the financial accounts, however, disclosed a net loss of 5,10,000. So that's what is mentioned here. The following information was revealed as a result of scrutiny of the figures of both the sets of account. They have given some, line items for adjustments. Finally, they are asking you to prepare what? A memorandum reconciliation account. Now, this reconciliation can be done using two methodologies. One is a statement format. The other one is an account format. Statement, you will add and subtract. When you are following account format, additions will get credited, deletions will get debited. As simple as that. Clear with this, guys? Now you have a choice. You can either start with costing records and arrive at what? Your financial records, or you can start with financial records and arrive at the costing records. But no matter what you do, do it logically. Fine, guys? Clear with this? Right? Now, shall we get started here? Shall we get started here? Now what we can do is, they have prepared one memorandum reconciliation account here. They have prepared one memorandum reconciliation account. So they have started off with costing books, right? And what they have done is, they have arrived at the financial books. So what is the starting point? Costing profit. They have started off with costing profit, and they want you to arrive at our financial profit. Clear with this, guys? Clear with this? Now, keeping this in mind, let us also stick to this. Keeping this in mind, shall we read line item, each and every line item? You guys tell me whether it should be added or subtracted. Logically, you tell me. Added means credited, subtracted means debited. Fine? Fine, guys? Done? Right. Now, let's get started. So, we are starting off with costing profit, and we need to arrive at financial profit. Fine. First, factory overhead under absorbed. Wait, what is the meaning? Absorbed overheads is less than the actual overheads. which means what? Which means what? Absorbed overheads. In my costing, I have considered a lesser expense, which means the profit reported under costing is more, while under your financial accounts it's less. You need to now subtract. Clear? This is a debit item. So this 40,000 gets debited here. Clear with this, guys? Right? You guys are clear with this? By the way, this ledger, since it's a loss, it starts off on the debit side. Had it been a profit, it goes to the other side. Fine? Clear with this? Right. Next one. Administration overheads over absorbed. It's exactly the opposite of it. Right? So this gets what? Added up. So this gets credited. That is the reason you can find it on the credit side. Guys, clear with this? Do it logically. You don't need to mug up. Next one. Depreciation charged in financial accounts. Depreciation charged in cost accounts. Now you guys tell me the difference between the two is how much? 50,000. Now you tell me this 50,000 rupees is going to be a reconciling item. Now, very strictly speaking, this is not at all a line item of to be considered. Reason is depreciation would have already been included in factory overheads, because depreciation is not separately charged to your cost sheet. All the items of indirect cost will lose their identity, turn into one called as production overheads, enter into the WAP through the absorption process. Ideally, no. But that's why I said in this chapter you cannot see too much of costing logics. They want a lot of reconciling items, and hence it is being mentioned like this. Are you all able to follow this? Are you all able to follow this? So now in this case you tell me who is charging more depreciation, costing or financial records? Financial records. So basically in costing records there is a lesser depreciation, which means the profit reported under costing is more, while now you need to reduce this 50,000 to arrive at your financial profits. So now what do you need to do? Subtract or debit, and that's the reason why you can find this 50,000 here. Clear with this, guys? Logical. Let's move to the next one. So now interest on investments. It's not considered, but I need to now arrive at my financial profit, add it up, put it on the credit side, 96,000, you can find it here. Clear, guys? Any issues? Next one. Income tax provided. It's actually an expense considered under financial accounts, not considered here. Right? So now what do you need to do? Subtract or you debit it here on the memorandum reconciliation account. Fine, guys. Then interest on loan funds in financial accounts. It's an expense not considered in costing. Now you go and debit. It's going to be 2,45,000. So 2,45,000 here. Fine, guys. Next one. Transfer fee. They themselves have given. It's a credit to be now considered. So now put it on the credit side. Add it up. 24,000 rupees. It gets added up here. The next one. Stores adjustments, we don't know what this is, but they have given it's a credit in financial accounts. Just add it up or put it on the credit side. It's going to be 14,000. Fine, guys. And finally, you have dividend received, another income not considered in costing. Put it up there. It's going to be 32,000. And if you knock off all these things, you will get this as the balancing figure, 5,10,000, which is ideally matching with the figure mentioned here. Clear with this, guys? It's as simple as that, right? Fine. Right? Your magic show got it will tally, huh? Okay. Okay. Right, guys. Okay, fine. That's about it. By the way, guys, but the most important takeaway here is that, guys, please. The most important takeaway here is that many do not even know that there are 3 ways in which you can deal with under or over absorption. This is highly conceptual, right? This is where India stands out. Globally, what they say is nothing. Always treat it as a period cost. That's what generally people do. You know, costing is the same across the globe. In India, what we say, no, don't jump to that conclusion. Our cost accounting standards say, don't jump to the conclusion. If there is an under or over absorption, don't immediately jump to the conclusion. See if it is happening because of normal or abnormal reasons. Normal reasons, treat it as a period product cost, using supplementary rate, charge it back to all those 3 components that I was talking about. If it is a period cost, if it is due to abnormal reasons or inefficiencies, then you take it to your period cost, and altogether there's an alternative way of doing, which is nothing but do nothing, carry it forward as a balancing figure in your ledger itself. Are you clear with this, guys? So this is actually something that you need to know. Fine. Right, guys? And in this chapter, there is a silent assumption that goes that you are always following the 3rd assumption. Fine, guys. Done. Right? Let's go and update our library for adjustments. Do it. How many of you are learning this for the first time? This thing that I told you, carrying forward the logic behind that. Okay, fine. Not a problem. But please know, tomorrow in an interview, if someone is asking you these kind of questions, you should know why you are doing whatever you are doing. As simple as that. Right? See, I did my internship at Big Four. In that, when I gave my CV, obviously I mentioned my marks in my costing. these guys went 2 steps ahead. They asked me a lot of things with respect to stock valuation and the reasoning, the logic behind it, just to know whether I am mugging up the subject and I scored it or I logically understood. So in real life, that's what people do. Your marks alone is not sufficient. Clear with this? And this is also funny. I mean, it's a very good, learning is fun, as they say. It's a very good way of learning and the right way of learning. Clear with this, guys? That's why I'm explaining the concepts to the extent possible, even if it is an RTP discussion here. So now let's go and update our library of adjustments. Write down question number 12. The type is descriptive. The chapter name is Cost Accounting Standards. Put it as CAS. And write down the concept is Memorandum Reconciliation Account. Memorandum Reconciliation Account. Memorandum Reconciliation Account. Yeah, that's about it. Shall we move on to the next one? Guys, yes, let's move on to the next one. Yes, the next question. This is about batch costing. Again, fairly a simple question. This is a straight lift from the institute study material. Not much of value addition, but let me just quickly walk you through this. This sum is directly from the study material. A jobbing factory has undertaken to supply 300 pieces of a component per month for the ensuing 6 months. Every month, a batch order is opened against which material and labor hours are booked at actuals. Obviously, material and labor being your prime cost components are always considered at actuals. You don't absorb them because they are readily available on a per unit level, right? Then overheads are levied at the rate per labor hour. So in this case, what they are saying, the absorption rate, the base quantity they are using is labor hour rate. The selling price contracted for is 8 rupees per piece. From the following data, calculate the cost and profit per piece of each batch order and the overall position of the order for 1800 pieces. So basically what they are saying is, month wise they have given per batch what is the output that they are achieving, and they have also mentioned the material costs, the direct wages has been mentioned, and for every batch what is the direct labor hours taken has also been mentioned. Clear with this, guys? Right? Why have they mentioned this? Because if you see in the other details, month-wise they have the chargeable expense. This is nothing but overheads, right? They have given what is the total overheads and what is the total direct labor hours incurred in the factory. Are you clear with this? This is a total data. This is the total data for the factory. This data that is given is exclusively for this particular batch. Clear? So what do? Using this data, arrive at the absorption rate. That rate you multiply with the respective hours in that batch, so that batch wise you will also get the overhead figure. Are you clear with this? Are you clear with this? And now you can prepare the batch wise cost sheet. You can arrive at the batch wise cost data and you can just life will move ahead. As simple as that. Clear with this, guys? Clear with this? This is all they have asked for in this sum. And once we do that batch wise, they are also asking for the entire 6 months. Totally, if you add it up, I think it comes to 1800. Does it come to 1800 if you add it up? Someone just try it out. It doesn't come to 1800. Sorry? Okay, 1830. Fine, okay. Fine, let's do the sum. Let's proceed into the sum and then we will, we will figure this out. Right? So now, look at this, guys. Look at this. This is fairly a straightforward sum. Month wise they have all the details. They have month wise output. Yes, the total comes out to 1830, right? This is what they have given. So total productions for each of the 6 months is given. Sale value, how have they arrived? They have given the selling price is 8 rupees per piece. So into 8 if you multiply, are you getting these figures? 8 into 310, you get this. Yes, so it goes on, right? Material cost, this data is given batch wise. Direct wages, this is also given in the question. Now chargeable expenses, how do you do it? Look at this. This is how they have arrived at. They have just given a hint to calculate. This is nothing but calculation of absorption rate, and then respectively you will just multiply with the actual labor hours taken for the respective batch. For example, here if you see for the month of Jan, what is going to be my absorption rate? 12,000 divided by 4,800. How much is that? It's going to be 2.5, right? So 2.5 is the absorption rate for every hour. How many hours have I taken in the month of Jan? 240. So into 240 if you do, how much you get? You get 600, right? That's how they have arrived at this. Are you clear with this? Month wise you calculate the absorption rate, multiply it with the respective actual hours taken, and you will get this off. Clear with this? And of course they are also having one total column here. Fine, guys, clear with this? Are you all able to follow this? Right? So now what do? You add this up, you get the total cost. Sale value you have, now you have the total cost. Subtract the two, you get your profit per batch. Guys, yes, this is plain, fine, and the total cost per unit under each of the batch. So take the total cost divided by the number of units, the output here, right? You get the cost per unit. Here the profit per unit is going to be, take the profit column divided by the number of units. Once again, you get what? The profit per unit. Are you clear with this? Batch wise, you've got the total cost, the cost per unit, your total profit per unit. Clear with this? And you've also got the average of the 6 months. The total figures are also available, per unit figures are also available, which has been averaged out for the previous 6 months. Are you clear with this? Averaged as in, when I say per unit, if you do, basically you are considering all the figures, right? So this is a representative figure. Are you clear with this? Now they are saying, suppose the company is having a batch order of 1800 units, right? What is going to be, this is what they have asked here. What is going to be the overall position if there is an order being placed for 1800 units? So now what do? You use this total column figures. So basically the sale value is going to be how much? 1800 at the rate of 8. This is going to be the sale value. This 1800 units, is it produced in one batch? No, across multiple batches. So what do here? You take this as the average cost. It is getting averaged now, the total cost for 6 months divided by the total units of 6 months, you get the cost per unit. That is nothing but averaged out cost per unit. That you take it up here and you put it, you get the profit for an order of 1800 units. Are you clear with this, guys? Right? The wordings of this question is little vague. It is little vague. You need to understand what they are asking here. They are saying if at all there is an order for 1800 units, right? In that case, the cost that you need to take is from this total column. Are you clear with this? Because it is not coming from a single batch. Guys, are you all able to understand this? Yes, fine. And that is all they have asked for in this sum, nothing beyond that. Fine, guys, clear with this, right? Just go and update your library of adjustments. Right on. Right on. So question number 13, it's descriptive again. The chapter is batch costing. And the concept is going to be cost and profit per unit, cost and profit per unit of each batch, cost and profit per unit for each batch and for the entire order, and for the entire order. Now guys, shall we go on to the next sum? Yes. Here comes a mighty question from process costing. Now, now guys, let me read out the question for you first, and then let me just open up on a few things, right? We will discuss and we will proceed. Fine, guys, right? And predominantly, process costing stems from the concept of treatment of losses, the manner in which you treat losses. That's from that as a base only this entire chapter gets built up. Clear with this, guys, right? Now let me quickly read out the question for you. The following data are available in respect of process 1 account for the month of June 2024. Opening stock of WIP is going to be 600 units at a total cost of 4,20,000. The degree of completion of the opening WIP is going to be, so every unit in the opening WIP is 100% complete with respect to material, labor and overhead 60% complete. Clear, guys? Guys, full focus, please, full focus. Right? Done? Next. Input of materials at a total cost of rupees 52.2 lakhs. And how many units got inputted freshly right now? 9,200. Direct wages incurred, the figure is given. Production overhead figure is given. Right? Units actually scrapped were how many units? 200 units. And these units scrapped, right, they also have a degree of completion, right? What is it? Materials, yes, okay. So it's basically losses, right? So you have what? Materials 100%, labor 80%, overheads 80%, degree of completion. Are you clear with this? Are you clear with this, guys? Yes? So how can units scrapped have a different degree of completion? For example, let's say your mom boils milk, okay? Let's say it takes 10 minutes for the milk to get completely boiled, right? So what she does, she takes a vessel, pours that packet of milk. Entire material is gone right from the first minute the boiling starts, correct? At the 8th minute, your mom figures out that you know, this milk has got spoiled, right? Now, will she say, no, 2 further minutes I will continue and only then I will turn off the stove? Say, it's anyways gone now, she will turn it off then and there. What will she do? At the 8th minute itself, she will turn off? Yes. Now, with respect to the semi-boiled milk, entire milk got wasted. It's not 80% of the packet. Milk got consumed 100%. But labor and overheads were complete only to the extent of 80%. Correct? That's why even units that get scrapped will have a different degree of completion. Are you clear with this? Are you clear with this? That makes sense, no? Yes, that's about it. Next. Closing WIP, 700 units. The stage of completion of these units were what? Again, material, labor, overheads. See, on 31st, let's say on 31st of March, what month is this? June. On 30th of June exactly, on 12 midnight, it is not necessary that everything should be complete. At that point, if you see, some units were actually semi-complete. So the material got fully consumed maybe at the beginning itself. Labor and overheads were actually completed only to the extent of 70%. Makes sense, no? That can happen. Right. Then 8,900 units were completed, transferred to the next process. The normal loss is 4% of the total input. Total input means what? In this question they have clearly given opening stock plus the fresh units inputted. Right. The scrap value is going to be 60 rupees per unit. Now you are required to compute the equivalent production, equivalent cost per equivalent unit of each element, and compute the cost of abnormal gain or loss, closing work in process, and the units transferred to the next process using what method? FIFO method. If nothing is given in the question, what can you do? FIFO only. You can use assumption. Huh? Based on? Okay, so in this question you tell me. They need not have mentioned anything. This question can be done only under FIFO method. Why? The breakup of opening WIP is not given. This 4,20,000 is there. Out of this, how much is material, labor, overhead is not given. If you have to do it under weighted average method, that is required. If you have to do it under FIFO method, you don't need the breakup, but you need the component wise degree of completion. Clear? Clear? Right? This is what is the concept of FIFO and weighted average that is unique to process costing. Right? Anyways, fine. In this question, they have asked for FIFO method, so we will be doing it under FIFO method. Clear with this, guys? Right? Now, one very important thing. Let me just, you have the question with you, right? You just participate. Now tell me one thing, guys. What was the opening WIP? 600 units, right? Forget the degree of completion and all, right? Forget the degree of completion. Right now, I am just putting a tracker column. I want to know whatever I inputted, I want to know where it is present. Opening WIP was 600, right? Then how were the units introduced? So 9,200 units were introduced. So a total of how many units got introduced? 9,800 units, right? They have mentioned in the question how many units got actually scrapped. Actual loss that is given in the question was 200 units. Units completed, how many units got completed? 8,900 units, right? And then finally, how many units are there in the closing WIP? How many units? 700, right? Tell me, guys, total it up. How much is it? How much is it? 9,800, right? And one more thing, since they have given that this is going to be under FIFO, 8,900 units, how will I do it? The first 600 will come from my opening WIP. The balance 8,300 is going to be units introduced and completed. Correct? Yes, guys. Fine. That is one thing. Now, what we need to do is now basically they have not mentioned this is nothing but preparation of a process account. Correct? No. This is nothing but preparation of process account. They have asked everything. Look at this. They have asked for these things, cost per equivalent unit. They have asked for the abnormal loss or gain closing. These are nothing but the credit side items of a process account. Correct? Debit side items, it is already given. Labor, overheads, opening WIP, values and all are given. So that is what process costing is all about. Preparing your process account. They have not mentioned us to prepare a process account. But technically speaking, the credit side items they have asked you to compute. Correct, guys? Now what happens is basically, so to put it in a rough sketch, you have a process account, the debit items are given, you need to arrive at the credit figures, correct? And how would you do that? Simple, you calculate the cost per unit, right? Just like how we did. What is the cost per unit? total cost minus normal loss scrap income divided by what? Input quantity, whatever you input, minus normal loss units. Simple. Guys, simple. Right? Net expected cost divided by expected good units. That is what we are going to do here. But there is one problem. What is the problem here? Now, if I do this, input minus normal loss, that is my expected good units, correct? All the expected good units are not 100% complete. So I can't add monkeys with donkeys, as I was telling you. So what you need to do, search them component wise. So can I say input minus normal loss? Instead of saying that, can I go and figure out is equivalent to units completed plus closing WIP and all these things? It's another way of doing it, right? What I will do is I will figure out each of these components, convert them with the degree of completion and calculate the equivalent completed units. Basically, the step number 1, calculation of cost, calculation of equivalent units, is nothing but your denominator computation. Agreeing with me on this or not? Right? Step number 2, calculation of cost per equivalent unit, is nothing but this formula application. And once you do that, now you can arrive at the credit side items of the process account. Agreeing with me on this, guys? Basically, the entire process costing stems out from this single formula. Right? If you are aware of that, you will be able to crack this chapter. That's about this entire chapter. Fine, guys? Right? Now let's proceed with this. In this question, what is the actual loss? It's given at the question. 200 units. Now let's classify into two. Normal loss, how much have they given as a normal loss? The percentage, it's going to be 4% of the total units put in. What is the total units put in? 9,800. So how much is that? 392. Well, again you have what? Abnormal gain. I was expecting to lose 392 while I ended up losing only 200, which means I have gained how much? 192 units. Are you clear with this? There is an abnormal gain here, right? Abnormal gain doesn't mean that units have magically got created. I have lost something that is less than what I expected to lose, or in other words, I ended up producing good units more than what I expected. Guys, are you clear with this? Yes, right? Now, with this backdrop, let us go and prepare the statement of equivalent units. Shall we, guys? Yes, shall we, guys? Right. Now, this is exactly what they have mentioned here. Right. Now, the statement of equivalent units, you have an input column and you have an output column. These two are trackers. Tracker column means it doesn't consider the equivalent units and all. This is tracker. Whatever I input, I am representing it on the output side. And here is where component wise, since the degree of completion is different, we have this breakup of percentage and units. Now, first on the input side, opening stock is how much? 600. Closing stock is how much? Your fresh units introduced is how much? 9,200. The total input is how much? 9,800. Now, this is represented by what? The first thing that I told you here is your units completed. How many units got completed? 8,009. Out of this, you opening WIP now completed 600. Units introduced and completed 8,300. Correct? That is what they have mentioned. Opening WIP completed 600. Units introduced and completed is going to be 8,300. Correct, guys? Yes. Then this component is done. Then your closing WIP, how much is that? 700 units. How much is it? We put it here, 700 units. Are you clear with this? Right? And how much is the normal loss that I expected? 392 units. Are you clear with this, guys? If you add this up, that is units completed, right, plus closing WIP, right, and plus with all this normal loss, how much do you get, guys? 9,992. How much did I input? 9,800. Why is this side more? Abnormal gain is fine, but here when we did it was tallying, no? Here we took the actual loss. Here we took the normal loss. Then what happened was, technically speaking, 8,300 units got produced, no? Right? This was actually beyond my expectation. What I actually produced was more than what I expected to produce. Reason is, I produced 192 good units beyond my expectation. Now you go and reduce that, because this units completed has the good units that developed beyond my expectation. Now you reduce it. It's another way of putting it on my statement of equivalent unit. Agreeing with me on this, right? Because here I've taken the actual production, right? And my actual production includes the ones that got produced beyond my expectation. Second, what happened to this? Inachu, whatever. Okay, fine. Coming back guys. Okay, so now here what happened, this 8,300, this, guys, please come back. This 8,300 units, right, had included units that got developed or that got completed even beyond my expectation. Agreeing with me on this? But what I need to have, basically the statement is nothing but denominator computation. I should have only expected good units, reduce this, abnormal gain was not expected, reduce it now you will get this. Are you clear with this, guys? Are you clear with this? And one more thing, what do you mean by expected good units? Everything except my normal loss units, that is called as expected good units. That's why against normal loss we put a dash here, because if you add that also, now it is not expected good units, it is total units. Are you clear with this? That's why in your statement of equivalent units you have a dash against your normal loss. Are you clear with this, guys? Yes. So now what you do, now go ahead with the degree of completion. Now what they have said, the degree of completion of opening WIP, what have they said? 600 units, it is already 100% complete with respect to material, which means in the current period I would not have consumed any materials with respect to the 600 units. That's why it is put as nil. With respect to labor and overhead, 60% is already completed, 40 alone is now completed by consuming the current period labor and overhead cost respectively. So 600 into 40% is going to be 240, 600 into 40% is going to be 240. Clear with this, guys? Then from fresh materials introduced, these units are what? These units are started from the scratch and completed before the end of the period itself. 100% will be the degree of completion for all the cost components. It's going to be 100, 100 and 100 and 8,300 for all the three. Clear with this, guys? Closing WIP, what happened? I started from the scratch, but as at the end of the period, I couldn't complete it fully. With respect to material, 100%, labor and overheads, 70, take it and multiply. Clear with this, guys? The most important component comes with respect to abnormal gain. Abnormal gain, generally what students do is they take this degree of completion. Please do not make the mistake. Abnormal gain is nothing but good units. They are not getting scrapped. So technically this entire degree of completion is not even required. Are you clear with this? Because, sir, then you didn't scrap anything. I scrapped only normal loss units. And for normal loss units, I don't value it separately. Guys, are you clear with this? This degree of completion is not even required, but many people fall for it. Clear with this? Then, sir, why are we taking the degree of completion as 100%? This was already included here. These are completed units. It only makes sense that it's fully completed. Are you clear with this? That's why the degree of completion is 100% and you reduce it. Guys, are you clear with this, guys? Right? And now you do it, you will arrive at the proper denominator for each component of cost, and this is the way you need to apportion what? This is the way you need to apportion all the components of cost for the purpose of preparing your process account. Are you clear with this? Step number 1, statement of equivalent units. Done? Yes, guys, done? Fine. Step number 2, cost per equivalent unit. Now what do we do here? First you take the material cost. The cost is given in the question, 55.2 lakhs. 55 lakh 20. Yes, 55 lakh 20,000. Now, if you noticed, we are still in the same formula. Total cost minus normal loss scrap income divided by the expected good units. That we got this year in our statement of equivalent units. We already got this. Now we are taking the numerator, dividing it with the respective denominator. In numerator calculation, what we should do is we should now reduce the normal loss scrap income. Yes, normal loss scrap income can be reduced against material or labor or overheads. Correct? Right? It can be, now I'm just opening up a debate wherein it can be done against any of the three components, but generally as a thumb rule, we reduce it only against the material cost, because when you are scrapping off something, the scrap proceeds generally you earn it only for the material value in it. That is the logic why scrap realization is generally reduced only against your material cost. I'm just giving you a logic. Are you clear with this? So from this material cost, you reduce the scrap. What is the scrap? 392 units. This is what you expected to lose. Again, we didn't actually scrap 392, we only scrapped 200 units. That adjustment happens separately. But here what are we doing? Expected cost divided by expected good units. We are still under expected only. Clear with this? But actually we would have scrapped out something different. Are you clear with this, guys? That's why I said in costing, stock is valued at expected cost, normal cost, not at actuals, because actuals will include inefficiencies or abnormalities that should not enter into your stock valuation. Clear with this, guys? So now what do? 392 into 60, this gets reduced. This is the net material cost to be what? Apportioned now, right? What is the denominator against which I should apportion my material cost? We have this here, 8808. Clear with this? So technically speaking, so the material cost for every equivalent unit is going to be how much? 624.03. Are you guys clear with this, guys? Are you clear with this? Similarly, labor cost, it's given in the question, 18,60,000. Take the denominator that we got in step 1, 8838. You divide the two, you get what? The labor cost per equivalent unit is going to be 210.45, and a similar calculation for POH. It's going to be 863,000 upon 8838, you get what? 97.65. So these are all the material cost per equivalent unit, labor cost per equivalent unit, production cost per equivalent unit. Add up the three. Basically, for every completed unit, it should get a share of how much? 932.13. Right? So if we are talking about a unit that got started from the scratch and completed in the current period itself, you can directly multiply that with 932.13. But there are some components like your closing WIP and all. With respect to material, it's 100%. With respect to labor and overhead, it's different. So that is the reason why component wise we have computed the cost per equivalent unit. Are you clear with this, guys? Are you all able to understand this? Yes, because I'm telling you, this is one of the most intricate discussions in entire costing, and trying to condense it in a revision is quite challenging even for the faculty, right? That's why I'm keeping on asking you whether you are able to follow it, right? Fine, because that's why the prerequisite is that you should have already studied it once. That's when you can follow it, right? But I'm trying my best here. Fine, guys, clear with this? Clear with this? Right. Now, once we have done that, what are they asking for is, they are asking you to value every single component of cost. Clear with this, guys? Every single component, that is basically your process account, the credit side they are asking you to calculate. Guys, clear with this? So now what do you do? This is nothing. Step 1 into step 2 you do, you will get step 3. For example, abnormal gain. How many units of abnormal gain are there? 192. So what you need to do here, just go here. There are 192 units. There are 192 units of abnormal gain. I'm just erasing this off, right? There are 192 units in abnormal gain, right? Right, guys? Fine. Now each of these units should be valued. What you need to do, so with respect to materials, how many equivalent units are there? 192, right? So 192 into 624.03, right? That is going to be the material cost sitting inside the abnormal gain units. Are you clear with this? Similarly, 192 into labor cost, 210.45, right? So how much you get here? It's going to be 4406.40. And similarly, once again here, POH 192 into what? 97.65. You get this figure. Or ideally speaking, what you can do is, you can directly take 192 into what? 932.13, you will definitely get the same answer only. Are you clear with this? This item comes where? In the process account. On the debit side. It comes on the debit side. Clear with this? It comes on the debit side. You remember? Yes? I think a previous question where we did, right? We did a previous question, right? Again, that was also abnormal gain, right? So this is what it is. Now, one more thing I want to tell you. Looking at the figures in decimals, many of you might lose your confidence thinking that you've done a wrong answer. Don't fall for it. Don't fall for it. There is nothing, absolutely nothing wrong in getting decimals, provided you are completely convinced that your process is correct. This chapter, process costing, as the name suggests, is process driven, right? You have a 4-step procedure, and the 4th step is going to be your process account, right? That's what it is. Clear with this, guys? Similarly, with respect to closing WIP. Now, how do you value closing WIP? Go up. With respect to material, 700 equivalent units got produced, guys. So 700 into what? 624.03. You get what? The material value sitting inside my closing WIP. Similarly, for labor, it's going to be 490, labor and overheads, 490 into 210.45 and 97.65 respectively. Where is it? Yes, these figures you get. So with this, you can also now value the closing WIP. Are you clear with this, guys? Are you clear with this? Right? And finally, here comes the hero, which is what? Units completed and transferred, right? Now in units completed and transferred, how many units got completed and transferred? 8,900. Out of this, 600 units were opening WIP and 8,300 units were started in the current year and it got completed in the current year. Now units coming from your opening WAP is further classified into two. Previous period cost, that is nothing but the opening WAP value. The balance portion that got completed in the current year, that also needs to come in. Are you clear with this? So now how do we do this here? Look at this, look at this. So first for 8,900 units, first cost of opening WAP, 600 units, opening WAP value is given, 4,20,000. Now the balance portion of this opening WAP got produced only using the current period cost. Guys, correct? So how do you do this? You just go on top of your equivalent units. Look at this. 240 equivalent units for labor, 240 equivalent units for production overheads got produced by consuming the current period cost, and each of these should get a share of how much? 210.45 for labor and 97.65 for overheads. Clear with this? You just marry these two figures and you're getting it here. Are you clear with this? That's why material is nil, because it was 100% complete already. Whereas labor and overheads are now to some extent, to the remaining portion, it is getting done right now to the extent of 40%. So now what do you get here, guys? You get what? The opening WAP, that is, this is the value of only 600 units, right? The balance 8,300 units, what it got? It was completely completed, it was completely done using the current period cost. So what do? 8,300 into, give it a share of full cost of 932.13, and you get what? You get this figure here. You get this figure here, 8,300 into 932.13, you get this figure here, add it up, this is the total value of your entire units completed and transferred, and with that the sum is over. Guys, clear with this, guys? Yes, you guys are clear with this? Now, now there is one small thing I wanted to tell you all. In this question, they have rounded off these figures, right? So if you do, your process account is not tallying, there is some 30 rupees of difference, don't worry. What I would suggest is, when you are presenting it, present it in 2-3 decimals, but retain the decimals in your calculator, because process accounts and even in your standard costing also, it should tally, correct? It should match. So you do not do the same mistake. Here they have done it, they have rounded off and they have calculated. You please retain the decimals in your calculator so that it tallies for you. Are you all able to follow, guys? Right? Fine. Fine, that's about this particular question, and somehow I feel this attempt they are going to test you on abnormal gain. So I don't know for what joy they have tested 2 questions, and again it's abnormal gain coming in, and somehow it's just my instinct. I don't have any logic backup like how I'm doing till now. So but it's just my instinct. I feel your abnormal gain might be tested in this attempt. Fine. So that's about this question, guys. Any doubts here? Shall we proceed forward? Please go and update your library of adjustments. Right, and this question you please go and revise also once. For those who have not that strong in process costing, I know you might have found this little difficult, but it's not impossible. Please, maybe you just watch a revision lecture or watch a regular lecture, or maybe prepare by yourself whatever it is with this portion, and maybe then you come and approach this. Definitely you'll be able to crack it. Fine. So now let's go and do this. Write down, update your library of adjustments. Write down, guys. Yeah, write down. So it's descriptive, question number 14, process costing. Under the concept column, write down process 1 account within bracket FIFO and semicolon abnormal gain, semicolon abnormal gain. Done, guys? Fine. Shall we move to the next one? Okay. Now, the next question is kind of unique. Guys, the next question is kind of unique. It's one of a kind sum. It's one of a kind sum. I've not seen this kind of sum anywhere in the study material till now. So it's appeared in your current attempts RTP. So please give more importance to this as well. So question number 15. Let's get started. Yeah. 3 products X, Y and Z along with the byproduct B are obtained again in a crude state, which require further processing at a cost of rupees 5 for X, 4 for Y and 2.5 for Z per unit before sale. The byproduct is, however, saleable as such to a nearby factory. The selling prices for the three main products and the byproducts, assuming they should yield a net margin of 25% of costs, are fixed at, the figures are given, 13.75, 8.75, 7.5 and 1 rupee respectively, all per unit of quantity sold. During a period, the joint input cost including the material cost was rupees 90,800. Basically this is the joint cost, right? Or you can call it as a pre-split off cost, whatever it is, common cost. And the respective outputs are XYZ 8, 6 and 4,000 units, and byproduct B is going to be 1,000 units. The byproduct should be credited to the joint cost, and only the net joint costs are allocated to the main products. Calculate the joint cost per unit of each product and the margin available as a percentage of cost. Now guys, first this comes from a chapter called joint and byproduct, right? So now what do you mean by a joint product? What do you mean by a byproduct? Joint product is supposedly the main product. For example, now when I am producing something from a common process, more than one product will emerge. For example, crude processing, crude oil, if you process, now automatically from the same processing, just the degree will change, petrol will come in, diesel will come in, natural gas will come in, ATF, your aviation turbine fuel for aircrafts, that will also be a part. Just the degree of the degree of processing alone changes, but it all comes from a common process. Now can I say from this common process I don't want diesel? No, it's not possible. It's not possible. It is inevitable. If you have the choice to say that I don't want one product, I want only the others, then it is not at all a joint product, right? Then you are deliberately producing it. No. Are you clear with this? So here, if at all you process, you get more than one product, it's called as a joint product. Clear with this, guys? Now these are all main products, right? So I am producing something with an intention of getting three products, correct? But in the process, I get one negligible value product also, that is called as a byproduct. Clear with this, guys? For example, companies that manufacture juices, Tropicana, right? Let's say I'm just giving a very crude example. Let's say, Minute Maid is there. No? Let's say Minute Maid says that whatever juice that they manufacture, the base will be orange, right? So if you want an apple, an apple juice, the base will be orange, on that apple will be mixed, something of that sort, right? Let's say, okay. Now from a common I know the taste is very bad. I was just giving a hypothetical example. Why do you give that expression? Okay, right? Even I wouldn't go and drink that. I'm just giving you an example, right? So from a common process, more than one products emerge. But when they are doing this, it is inevitable that they will get one byproduct called as the seeds, the peel, whatever whatever are the products that will not enter into your main products, correct? It will come in, right? Guys, yes or no? Yes, the peels, the seeds and all these things will come off, right? What will they do with that? What will they do with that? Huh? There is one full-fledged industry thriving on that. Cosmetic. Only in advertisement they show real apple. What goes inside is only this apple seeds and apple peels. So it's a huge industry, really. So these guys have a ready market for that, right? Now you tell me, is the intention of Tropicana's intention, is it to come up with this byproduct and sell it and make money? No. But is it inevitable? No, it happens by nature. Are you clear with this? But whatever they get out of that is might be meager. Are you clear with this, guys? Are you clear with this? In this case, the byproduct, what they generally do is, you incur some joint cost, correct? For manufacturing all the products, including the byproduct. Byproduct treatment is very similar to that of normal loss. What they do is, do not value byproduct separately, but the byproduct will generate some scrap income that you go and reduce it. The net joint cost, what you do, apportion between the byproducts. Are you clear with this? Right? This is what gets generally followed. Now, the next question is, how do I do it? What is the base using which I apportion? There are different methods like sale value at split off point method, final sales value method, NRV method, physical units method. You have a lot of methods. In this question, what method are they saying? They have coined one method and asking you to identify. It's a very unique sum. That's why I said they have coined one method and they are asking you to identify. What are they saying? Just look at this. they are saying from a common process X, Y, Z and a byproduct comes in. Forget this byproduct, whatever income generated out of it, it goes on to recover a portion of your joint cost. The net cost only gets apportioned between X, Y and Z, no problem. What they are saying is X, Y and Z needs to be further processed, right, at a cost of 5, 4 and 2.5, right? And what are they saying? The final sale price also they have given. The selling prices for the three main products and the byproduct should fetch them a margin of how much? 25% on cost, and the selling price is fixed at 13.75, 8.75, 7.5. These are for the three main products, and 1 rupee for what? For the byproduct. They have fixed all the selling price. Clear with this? And they want what? They want a net margin. They are expecting a net margin of how much? 25%. So basically you need to do reverse working in this question. What you need to do? Sale price you have? Guys, yes? Reduce the margin. You get the total cost per unit minus the further processing cost you do. You get its share of joint cost. Guys, yes? Are you understanding this? Right? Now that is not the share of joint cost. That is the basis for apportioning the joint cost. Right? Wait, I will walk you through when we are doing the solution. Now look at this. Look at this. First, three products have the question with you. The three products X, Y and Z. Guys, this is important because I have not seen this kind of sum at all in the study material. A unique sum. Again, if something is unique in the RTP, chances of getting tested in the exam is much more, especially if it comes in your attempt. Right? That attempt's RTP. Clear with this, guys? Now what have they said? Selling price is how much? 13.75, 8.75 and 7.5. Right? They are expecting a profit of how much? 25% on cost. Right? So selling price, profit, cost. If my cost is 100 and they have said 25% is what I want as a profit on cost, the selling price is going to be 125. Right? Or on selling price, if you want to express this profit, it's going to be 25 upon 125. That's going to be 20% on sales. Guys, correct? So here the anticipated margin is going to be what? 20% on sale, reduced at 0.2 to selling price. You get what? Cost per unit. Guys, correct? This cost per unit of each of the product is made up of two components. One is a share of joint cost. The other one is the further processing cost. Correct? This only makes up to the cost of a product. Right? Now, your further processing cost, also known as post split off cost, is it given in the question on a per unit level? Yes. How much is it given? They have given it as 5, 4 and 2.5. It's given here 5, 4 and 2.5. Right? So what is the joint cost per unit? 6, 3 and 3.5. Now how many units are there? This is also given 8,000, 6,000, 4,000. So now they are saying the total output cost, that is basically the total cost is going to be, that is the share of joint cost is going to be 48,000, 18,000 and 14,000. Wait, this is not the share of joint cost, because if you add this up, how much do you get? How much do you get? 80. Yes guys, 80,000, right? But what is the joint cost given in the question? 9,800. Does it add up? No, it clearly indicates that use this as the basis to apportion the cost. Are you clear with this? Are you all able to understand? It's a unique sum. That's why I'm again telling you it's a very unique sum, right? So with this they have arrived at the ratio 24:9:7. Are you clear with this? Guys, understanding this? Yes, 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 fine. Now you tell me guys, what is the joint cost to be apportioned? Can anyone calculate? Now I told you byproduct should be knocked off, correct? Byproduct income should be knocked off. Right? You tell me 90,800 is a total joint cost. Correct?
Yes, sir.
Guys, yes. Yes. Can anyone tell me what is the net apportionable your joint cost? 89,800. How did you get that? 90,800 minus 1,000 into 1. You get 1,000. So you get what? 89,800. That's where the issue comes in. Look, this is the step here. What they have done is, there they are expecting an individual profit of how much? 25%. That is also applicable on the byproduct. Guys, yes. Are you clear with this? So technically speaking, 200 rupees goes to the profit because 20%, right? 800 is only the amount that needs to be reduced here. Guys, are you all understanding this? Are you all understanding this? Look, joint input costs, total amount, gross amount 90,800, From this byproduct income, what they are saying, sale revenue is 1000 less the profit is 20% on sale. This net realizable value should only be adjusted against 9800, arrive at the net joint cost and apportion this. Are you clear with this, guys? Are you clear with this? This 90,000 should be apportioned in what ratio? That is what we found out till now, 24:9:7. Are you clear with this, guys? Right? And from here on the sum is direct. I mean, from here on there is nothing great here. So basically, what is the net joint cost to be allocated? So this is how they have computed. 90,000 is the allocable cost, right? Do it in the ratio of what? 24:9:7. So 24 plus 9 plus 7, how much is it coming out to? 40. So it's going to be 24 upon 40 into 90,000, 9 upon 40 into 90,000, and 7 upon 40 into 90,000. So you get the share of 54,000, 20,250, and 15,750. This is the actual share of joint cost. Are you clear with this? If you add it up, you get what? 90,000 rupees. You have the outputs also here, divide the two. So now you get the actual joint cost per unit. Are you clear with this, guys? Right? And the question does not stop here. They are asking you calculate the joint cost per unit and the margin available as a percentage on cost. So they have said no 25%. That is what they expected. But in reality, what has happened? They are asking you to find out. Are you clear with this? Right? So now how do you do that? So the joint cost, actual figures, you have it here. The post split of cost per unit, you have it here. You add this two, you get the total cost. Selling price is given. Subtract the two, you get what? Margin. Express this margin as a percentage of total cost. So technically speaking, the margin as a percentage of total cost is different for each product. That is what they have arrived and shown. Are you clear with this, guys? Yes, you guys are clear with this? Yes, this sum is very unique. This sum is very unique. Please mark it as important. I can't stress beyond this. If this sum comes, treat it as a separate animal and knock it off, right? Because RTP this is the reason why we are having the discussion today, right? There are certain unique things that you will know only when you enter in detail into the RTP, right? And I don't want you guys to miss out on this. Guys, are you all clear with this? Is everyone clear with this, right? So please go and update your library of adjustments. You guys got it, right? So I'm just summing it up. So what you did was, so first we calculated, we got the total selling price minus margin, we got the expected total cost. From that subtracted the further processing cost, we get what? The share of joint cost multiplied with the number of units, the total joint cost, we use that as the base to apportion the actual net joint cost. Once again, one more twist was there. The net apportionable joint cost was what? Total joint cost. From that, only the NRV of the byproduct should be taken, adjust that for profit, and that net amount you apportion it. And finally, you arrive at the actual margin and express it as a percentage of cost and close it off. Clear with this, guys? If this sum comes, I'm expecting it to come for 8 marks. If it comes, it could be an 8-mark question, is what I feel. It should ideally be an 8-mark question if it comes. Clear with this? Done? Done, guys? Please go and update your library of adjustments right now. Right now, descriptive, JP and BP, joint product and byproduct. Write down, quick. Come on, let's finish it off. JP and BP. Concept is apportionment of joint cost within bracket reverse working. Apportionment of joint cost within bracket reverse working. Semicolon, treatment of BP, byproduct. Apportionment of joint cost within bracket reverse working and treatment of BP, byproduct. And if possible, in a red ink, write down unique sum. This is unique, nowhere to be found in the study material. Done? Done, guys? See, we are extensively discussing the entire RTP, right? And you are also, I hope you guys are all catching up the library of adjustments, right? It is going to be a game changer. Trust me, guys, the day before your exam, it's a must visit. Please revise all these things the day before your exam. It will not take beyond 15-20 minutes. Now, you can just tick off, on this sum we did this, on this sum we did this, the unique adjustment. See, it will not take this much amount of time if you are again revisiting. Clear with this? Right. Fine. Shall we go to the next one? Yes, service costing once again. I think this is the third sum we are doing in service costing. We did on hotel, that insurance on dummy sum we did, and then this room days. That's what? Hotel room days, the hotel rooms. Okay, and we did one insurance sum, and this is a third sum regarding tolled roads. Right? Fine. So guys, shall we get started? Yes, Okay. Now this sum is about toll road costing. Again, this is a study material sum, straight lift. But again, somehow I feel this sum again or something related to this sum can come in your exam. Again, I don't know why, but it's a gut feel. I feel somehow something related to this sum might come. Again, that's why I said it's a gut feel. I don't have any specific logic for this, but yes, that is what it is. That's how I feel. Now, this is based on a concept, a model called as BOT. How many of you know Nitin Gadkari? Yes, who is he? Railways Minister, Road Transport Minister, yeah, highways, okay, right, fine, sorry, right, is doing an extraordinary job, exceptional job when it comes to building of highways, and what he does is based on this model. Because, okay, I'll again restrict my discussion very, I'm slightly deviating off topic, but this is actually kind of informative. So, the government, is always running on a deficit. We don't have enough money, so we borrow from external, we have this external funding and all. Every year budget, few days back the budget also happened, right? So for infrastructure activities, generally the government is always running short of money, right? That's where Nitin Gadkari, the man who is responsible for all this highways and all this infra related development with respect to road transport, you should see how beautiful roads we have right now. I'm talking about highways. I'm not talking about potholes that is there in the street. No, talking about highways. You should see. He's doing a very great job. What he says is that's very logical. You don't need funding to actually build a road. You know how it happens. That's where the concept of BOT comes. BOT means build, operate, transfer. What they do is they have a plan. Government has a plan. Okay, so but now I'm coming back to the subject. It is relating to the subject. So what the government does is, I need to build, let's say, a 500 kilometer long highway, right? Now, government will not build the road. What they will do is, they will invite tenders, they will invite people, huge infrastructure companies like L&T and all will come. These guys will participate. The deal is as follows. They will say, government will say, we will not shell out any money. You put your funds, you employ your resources, you build the roads, right? Then how will they get the money? The government will say, for the next 25 years, you have the right to set the toll and collect the toll charges. How much is the toll charges? That we will fix, right? But you take the entire money. We don't want even a single rupee, but you need to maintain this for the next 25 years, right? After 25 years, what will happen? You give it back to the government. Build, operate, transfer. These guys, what they will do? Will they go for this? They will do capital budgeting, financial management, long-term decisions, right? They will do capital budgeting. If they get a positive NPV, they will go for the project. Are you clear with this, guys? Right? Now, government is also happy. Public is also happy. These guys are also happy, right? It's a win-win situation for everyone, and you are not dependent on the government budget for this, right? This is how he built roads. This is how he built a lot of roads. He never questioned anyone, like, you don't give money, okay, I will raise money and I will do it this way, right? That is that's something really we all need to appreciate him. And he's one of the very few ministers in the central cabinet who challenges the prime minister himself, as in, like, he goes based on the facts. So he's a very rational person, and all praise for him because of the work he has done. And he has been re-elected to the cabinet once again as road transport minister for the wonderful job that he has been doing. And public are all praised for whatever work that he has done. Basically, that is what this is all about. Clear with this? Now coming back to the discussion here. So BK Infra Limited built and operates a 110 kilometer long highway on the basis of the BOT model for a period of 25 years. Now this 25 years is there, no? That is called as concession period, right? They call it as concession period, right? A traffic assessment has been carried out to estimate the traffic flow per day. And the details are as follows. In every day, 44,500 two-wheelers will come. Okay, they will use the toll. Then 3450 cars and SUVs, 1800 bus and LCVs, light commercial vehicles, and heavy commercial vehicles will be 816. Right? And for those who have this doubt, sir, for two-wheelers there is no toll. There are still some tolls that charge for two-wheelers also in India. There are very few tolls that charge for two-wheelers. If you go on a bike ride, you will know. So, or if you watch some vlogs, you will know. right? So there are still some tolls that charge for two-wheelers, by the way, right? Coming back here, guys. Now the following is the estimated cost of the project. They have given all these things. Let's not read line item wise. Total cost of the project is how much, guys? Some phone number again. Okay, so an average cost of 1120 lakh has to be incurred on administration and toll plaza. This is also what, for a period of 25 years. Guys, are you clear with this? This is what they have said. On the basis of vehicle specification, the following weights have been assigned to passing vehicles. Now you tell me, will the toll charges be the same for everyone? No. I mean, everyone has it. Will it be the same for every type of vehicle? No. Right? Actually, these things happened, but right now, like, they have a code word. Like, if you are actually going to Mahabalipuram and coming back from Chennai, you know what these guys do? They will ask you first question, sir, are you returning back the same day? Because the same road is also for Pondicherry. If you say yes, then they will say a code word. While you are coming back, you just say the same code word to that guy. He will also accept, so you just pay me 50 rupees, else it will be 75 rupees if you were to get a token. These things used to happen, but now it's all gone because of FASTag, right? Now basically, guys, coming back here, now here what they say is, they are assigning some weights to what? Each of the different vehicle types. Okay, please come back here, right? For each of the vehicle types. Now, can I add all these vehicle types as such and say the total vehicles passing? No. So I need to convert everything into some equivalent. How will you do that? Simple. You keep two-wheeler as the base, correct? This 5%, 10, 20% you leave it. This is a weightage, right? If I keep this as 1, if I give this a weightage of 1, car is 20 means what? 4 times. I will give this a weightage of 4. Or in other words, so what it takes for me to recover from 4 two-wheelers, I will recover it from 1 car. Correct, no? Here it's going to be what? 30 by 5, 6. Here it's going to be what? 45 by 5, 9. So while I'm converting everything into equivalent two-wheelers, I just need to multiply this. Are you clear with this, guys? Yes, are you clear with this? Yes, does it make sense? Right? These percentages as such, don't use it. Use that as a base to arrive at your weights. Clear with this? That is used for your converting it into equivalent units. Clear with this? Fair enough, right? So now how do you do? So calculate the total project cost per day of the concession. Concession period means what? The bought period, right? Compute the toll fee to be charged for per vehicle of each type if the company wants to earn a profit of 15% on the charge on the total cost. What is concession period they have given? Clear, guys? Very, very simple. So what you need to do, copy paste the entire question once again, right? 2-3 marks they will give for this. And you are saying CA exam is difficult. Okay, right. So yes, you need to mention all these things, no other option. You just copy paste, right? And they have given one more administration cost, right? You add that also. You get the total cost. Now, how many days are there in the concession period? So 25 years into 365 days. This is the total number of days. So you arrive at the cost per day in the concession period. Why do we do this? Because the traffic data that is available with us is also per day only, no? Yes, sir. Guys, yes, it's a daily traffic volume. So you arrive at a daily cost, right? Now, ideally, you should be having a question, sir, 25 years, how can we do? Ideally, they are ignoring time value of money, right? Generally, costing is only for short-term decisions. Costing is never for long-term decisions. But in this service costing, some reasonable base they are taking, and that's about it. Because long-term decisions are a clear-cut domain of financial management. Short-term decisions are a clear-cut domain of costing. That's why these two are blended together, right? Now that's about this. So the per day cost is going to be how much? 12.67 lakhs, right? So the cost to be recovered per day is going to be how much? So 12,67,000 plus a 15% profit on that. So this is going to be the total toll collection that I need to recover in a day. Guys, correct? And I recover this toll from different types of vehicles. Guys, clear? Guys, yes, this is the total revenue for me. Guys, are you all clear with this? Yes, right? I need to generate this from the 4 different types of vehicles. Yes, correct? And how am I going to do that? So basically, we have assigned the weights. Once again. Yes, look at this. Weights we calculated, right? Equivalent units conversion. Guys, yes, right? Daily traffic data. This was also available readily in the question, right? So we kept the base as two-wheeler. 44,500 two-wheelers is equivalent to 44,500 two-wheelers only. 3450 car is equivalent to how much? 13,800 two-wheeler. Meaning what? the revenue collected from 3450 two-wheeler is equivalent to the revenue that I would have collected from what? From 13,800 two-wheelers. Are you clear with this? Right? That's why we are converting everything. So basically there are a total of 76,444 two-wheelers, equivalent two-wheelers. Are you clear with this? So now I need to recover how much? I need to generate a revenue of 14,57,050 rupees. That revenue gets generated from 76,444 equivalent two-wheelers. So per two-wheeler I have to charge how much? 19.06. So now 19.06 the equivalent, ideally it's not the cost, equivalent tariff per two-wheeler, weights you multiply. So if I am charging 19.06 for a two-wheeler, for car I should charge 4 times, correct? 76.24. Bus and LCV 6 times, 114.36, and heavy commercial vehicles it's going to be 9 times, 171.54. Vitta flight okay, right? And that's about this. This is the tariff sheet, right? And ideally speaking, this is how they arrive at the tariff sheet also. After considering time value of money and all that, this is how they arrive at the tariff. You can see, the toll plaza, there will be a big board, right, in a green color. It will mention all the tolls, and it will also mention who are all exempted, like President of India, Governor, and all these details will be mentioned, right? How do they arrive? That is costing, and since it's a long term, FM also involved in it, and that's how they arrive at it. Clear with this, guys, right? Fine, and that's about this question. So they have asked for the toll fee to be charged for each vehicle type, and that is what we have arrived at. Are you all clear with this, right? And as I told you, again, I feel this might also come in your exam or something related to that, not the exam question, or at least this calculation, something I feel that it might come in, right? Fine, guys, because I think it's been a while since this got tested. Okay, guys, so shall we just go and update? Yes, sir. Write down. It's question number 16, descriptive service costing. It's toll road costing within bracket bought. Toll road costing within bracket bought. And semicolon equivalent units. Semicolon equivalent units. Done? Done, guys? Right? Just 2 more questions. Let's quickly wrap it up. Shall we move on to the next one? Yes, sir. Okay. Now comes the energy because we are going to wind up. Okay. Okay, guys. So this question is about marginal costing. Yes. Shall we start? Yes, sir. Right. So RS Limited manufactures and sells a single product X whose selling price is 100 rupees per unit and the variable cost is 60 rupees per unit. So which means what? Contribution is 40 rupees per unit, right? CPU is going to be 40 rupees per unit. Now read the question carefully. If the fixed costs for this year are 24 lakhs and the annual sales are at 60% margin of safety, calculate the rate of net return on sales assuming an income tax level of 40%. Right, I'll give you a minute time. Let's see if you can track this. Guys, come on, do it quickly now. Attempt, try it. Yeah. So now, guys, tell me, what is the marginal costing income statement format? Guys, come on, please participate. Sales minus variable cost gives you something called as contribution minus fixed cost gives you profit. Basically, the profit is nothing but EBIT, right? Operating profit. Okay. Now, this contribution is nothing but a variable profit. In this case, you've said every time I sell a unit, I get 100 rupees, and every time I sell a unit, I need to incur 60, and every time I sell a unit, I earn how much? 40 rupees. This 40 is nothing but my, can I call it as variable profit? It varies with every unit, variable profit. Correct? No, right? But is that my final profit? No. Why? Because fixed cost is said to be recovered. Clear? So then they can call this as variable profit, no? Why do they call it as contribution? Because whatever, let's say you have sold 1000 units here, right? You get how much? 40,000 rupees, just an example. Now this 40,000 goes on to contribute towards two things. First, towards recovery of fixed cost. Let's say fixed cost is 10,000. First, towards recovery of fixed cost, and whatever you are left over with is called as profit, 30,000. Clear with this? In our example, just whatever example that I gave you. So this variable profit ideally goes on to contribute towards two things. One, towards recovery of fixed cost, and whatever balance is left over, you can enjoy it as your profit. Since it goes on to contribute towards these two things, it's called as contribution. Simple. Clear with this, guys? Now in this case, in this example, what have they given? So the company has what? Okay, so the contribution per unit is 40. Now guys, what have they said? The fixed cost for this year was 24 lakhs. The fixed cost for the year was 24 lakhs, and the annual sales are at 60% margin of safety. Now please don't mug up anything here, it's all logical. What do you mean by break-even point? So basically it's a point where you make zero profit, zero loss. Your profit or loss is zero, or in other words, your contribution is just sufficient to recover your fixed cost. Right? Correct? Okay. What do you mean by margin of safety? So now the sale, actual sale made over and above my break-even point is called as margin of safety. Or in other words, can I say margin of safety is nothing but the profit generating sales. Correct? Up to my break, so my total sale is nothing but break-even point plus margin of safety. Up to the break-even point, the contribution generated is exactly equal to my fixed costs. Over and above my break-even point, whatever contribution that got generated from my margin of safety sale is exactly equal to my profit. Correct? That's why the total sales generates contribution that goes on towards the recovery of these two things, fixed cost and profit. Are you clear with this? Right? Now, what are they saying? If fixed cost for the year R is 24 lakhs, right? What is the break-even point? You tell me. 24 lakhs, right? Divided by 40 rupees per unit. How much is it? 40%, 40 rupees. 60,000 units, which means what? If I sell 60,000 units, I can break even. Correct? Right? Which means basically at this point there is no profit, no loss. Now what they are saying, this is my break even point which we independently found out. They are saying now the annual sales, currently the company is making some sale, I don't know how much is it, actual sales I don't know, but they are saying this actual sale, whatever they have done, it gives them a 60% margin of safety. Meaning what? Meaning what? They have made some actual sales, I don't know how much is that, break even sale of 60,000 units, and there is some margin of safety. Out of the total sale, 60% is margin of safety. It means that the break even sales is 40%. If 60,000 is 40, how much is going to be the full sale? How much is that? Crore lavana, units. So I have actually sold how many units? 1,50,000 units. How did you get that? 60,000 divided by 40 into 100. Are you clear with this? So actual sales is going to be how much? 1,50,000. Any formula that requires to be mugged up here? Absolutely not. Clear with this, guys. So what have they said? Calculate the net rate of return on the sales assuming an income tax level of 40%. So what do you now need to do? Now you have the actual sales figure, right? Prepare a marginal costing income statement. You get your profit. One extra line item, you also reduce tax from that. Net profit you get, right? That profit divided by sales, whatever you get, that's called as a net return on sales, net profit ratio. Clear with this? I don't know how much that is, I'll have to check. 14.4. Okay, right, that is what it is. So now we got 1,50,000 units into 100. Guys, yes, it's going to be how much? 1.5 crores, right? Variable cost is 1,50 into 60. That's going to be 90 lakhs. Contribution is 60 lakhs. less fixed cost given in the question 25, profit is 36, less income tax rate of 40, it's going to be 21.6 lakh. This expressed as a percentage of sales is going to be 14.4 percentage. Clear with this, guys? Now there is also an alternative way of doing. What is it? What's my margin of safety? 60 percentage of total sales. How much is that? 90,000 units. 60 percentage of total sales of 1,50,000. How much is that? 90,000. This 90,000 units margin of safety is nothing but whatever profit I generated purely is nothing but the contribution generated from this 90,000 units. Correct? So can I say 90,000 units into 60? 40 is the contribution. Sorry. How much is that? How much is this? 36 lakhs. Right? 36 lakhs. That is going to be my profit. Guide, correct. What happened? Yes, right. That is going to be my profit before tax. Directly you can arrive at this figure. All bypass. Right? Directly you can arrive at this figure. From that, reduce your tax rate. You get your net return, as they have called it. Are you clear with this? You can play around with the figures like anything. See, in marginal costing, guys, in marginal costing, remember this. Write it down somewhere. Write it down somewhere. Sales minus variable cost gives you contribution minus fixed cost gives you profit. Right? Now this is your vertical statement which you would have seen in many places. I will also parallelly put one horizontal statement and link the two. That is you have total sales that is broken up into break-even sales and margin of safety. Right? Now this is called as marginal costing jodis. Total sales is linked to contribution. Right? Then margin of safety is linked to profit. Break-even point is linked to fixed costs. The linking factor is what? These are all sales figures. It can be expressed either in value or in units. If you are expressing this in units, the linking factor will be contribution per unit. If you are expressing it in values, the linking factor is going to be PV ratio. So for PV ratio itself, I can have three formulas. It is contribution by total sales, or I can say profit by margin of safety, or I can even say fixed cost by break-even sales. Now they put this as three different formulas and they ask you to mug up what is the point in that. Guys, you can arrive at it. Are you clear with this? Are you clear with this? You can play around with marginal costing like anything. I have the margin of safety, you have the PV ratio, multiply the two, you get your what? You get your profit directly. Or if the margin of safety is in units, that's what I did right now. Multiply it with CPU, you get your profit directly. Guys, are you all clear with this? Do not mug up, especially of all chapters, marginal costing, definitely not. Clear with this? Are you all clear with this? And that's about this part. Now the next one is about sales mix. What have they asked here? For the next year, it's proposed to add another product line Y, whose selling price would be rupees 150 per unit and the variable cost would be rupees 100 per unit. Right? Now what are they saying? Currently they are having X. What is the contribution for X? 100 minus 60 is going to be 40. The next year they are going to start one more product called as Y. How much is that? It's going to be selling price is 150, variable cost is 100. So you have a variable cost, contribution of 50 rupees. Correct, guys? Yes, sir. Now the total fixed costs are estimated at how much? 28 lakh rupees. Now, the zero will not go here. Huh? Okay, right. Now what happened? Now guys, there is one challenge when it comes to a multi-product scenario. So they are asking you to calculate the break-even point. What do you mean by a break-even point? The number of units I should sell so that my contribution just recovers my fixed cost. Now I need to recover a fixed cost of how much? 28 lakhs. So I should generate a contribution of how much? 28 lakhs. But I should generate this contribution by selling X or Y or both? Both. So in this case, will I take the contribution per unit? So what is the formula for break-even point? Fixed cost divided by contribution per unit if you are calculating it in units. Now will I take the contribution of X or will I take the contribution of Y, or will it be both? It will be both because I am selling both together. Are you clear with this? In the mix of 5:3. So what will I do? This is called as weighted contribution per unit. Why? Because I am not selling X or Y independently. I am in a business of manufacturing and selling both. So weighted together. How will I do it? Very simple. It's going to be 40 into 5/8 plus 50 into 3/8. Correct? How much does it come out to? Guys, it's going to be 40 into 5 upon 8. How much is that? It's going to 25 plus 50 into 3 by 8, how much is that? 18.75. So how much is that? That's going to be 43.75. Guys, correct? What happened? Is there a problem here? Yeah, 43.75, right? So 28 lakhs divided by 43.75, how much is this? It comes out to how much? 64,000 units. Guys, yes? I need to sell 64,000 units to break even. 64,000 units of what? X or Y or both? Both. Now further break it now. So X is going to be 5/8 of this, Y is going to be what? 3/8 of this. So number of units of X to be sold is how much? 5/8 into 64,000. How much is it? 42. 40, no? 40,000. Is going to be 24,000. Are you clear with this? So the break-even point to achieve 28 lakh rupees, I mean for a fixed cost of 28 lakh is going to be 40,000 units of X and 24,000 units of Y, and that is what they have mentioned here, right? They have just done the same calculation, 40,000 and 24,000. Clear with this, guys? That's about this. This is once again, this is called a sales mix in marginal costing. But remember one thing, a very important thing again which I've observed many students miss out. If you are using contribution per unit, the sales mix percentage should be in terms of units. That is here they have given, no, what was the ratio? 5:3. This is in terms of units, which means what? Every time I sell 5 units of product X, I will sell parallelly 3 units of Y. Suppose you are using PV ratio, then the mix has to be in value. Value means what? If it is going to be, the mix in units and mix in value need not be the same, because selling price could be different. Guys, correct? One could be a high value product, the other one could be a low value product. In that case, suppose for the same mix, for the same products, that could be a different mix. It could be 4:7 also, right? Why? Because maybe product Y could be sold less in units, but the per unit selling price could be more in terms of value, that is more. What does it mean? 4 plus 7 is how much? 11, right? Every time I generate a sale worth 11 rupees, 4 rupees comes from X, 7 rupees comes from Y. That is the meaning. And this ratio, the value ratio, needs to be used if you are using the PV ratio. Whereas if you are using contribution per unit, what ratio you should use? Unit ratio, which could parallelly be different. Are you clear with this? This is one very important point. Are you all clear with this? In this case, all those issues are not there, but I am just opening it up. Clear with this, guys? And that's about this problem as well. So just go and update your library for adjustments. Right on. Right on, guys. Right on. So it's descriptive. Question number 17, descriptive. Chapter name is marginal costing. Write on the concept name. Come on, quickly write on. BEP semicolon MOS, break even point semicolon MOS, margin of safety semicolon, NP ratio, effectively that's what they asked, NP ratio, and semicolon sales mix. Write on, sales mix, and that's about it. Okay. Now, the last sum of this RTP discussion, there is one more, that's a theory, which is like nothing great. Last sum, mark the sum as important. A signature sum, beautifully drafted, mark the sum as important. Mark the sum as important, a very, very good problem. A very good problem. Now I want you guys, I'll give you some time to think as well. Guys, again, I again feel that something of this sort could come in your exam, this attempt. So, a very, very good problem basically. Again, I have not seen something of this sort in your study material. It is crackable, but it is something, it requires some out of the box observation, right? That's all. It is definitely crackable. Fine, guys, right? Shall we do it? Full focus, right? No matter how you start, finish it like MS Dhoni. Okay, so let's finish off on a high note. So here it comes, budget and budgetary control, a very good sum. Raja Limited manufactures and sells a single product and has estimated sales revenue of 302.4 lakh during the year based on a 20% profit on selling price. Each unit of product requires 6 kgs of material A and 3 kgs of material B. The processing time of 4 hours in machine shop and 2 hours in assembly shop. Fixed factory overheads are absorbed at a blanket rate of 20% of direct labor. The variable selling and distribution overheads are rupees 60 per unit sold, and the fixed selling and distribution overheads are estimated to be 69,12,000. The other relevant details are as under: purchase price per kg of A and B is given. Labor rate again per hour in the machine shop and assembly shop is given. There are two different types of labor, two different types of raw material. Finished stock, opening closing, raw material AB, each raw material type and one FG type, opening closing opening closing stocks are given. Clear? Yes. Next, required, calculate the number of units of a product proposed to be sold and the selling price. What have they asked for? First, number of units to be sold and the selling price per unit. Number two, production budget, and the third one is material purchase budget. If you get first step, you will get second and third. That's not a problem. If you get this wrong, the entire thing goes for a toss, right? Now, please don't jump to the solution. First, read the question, digest the facts, and work out something and just tell me how to go about with this. That's all I need. I don't even want the answer, right? Just tell me how do we approach. This is all I need, out of the box thinking, right? That's about it. With this sum, we're done. We're done with this RTP. Excellently drafted numerical problem, right? Take some time. 2 minutes, I'm giving you 120 seconds. Read this carefully, right? And we'll discuss the approach and we'll go ahead. Once you find out the number of units sold, that's about it. Please don't look at the solution, by the way. It's, then there's no point. It's all about the experience here. So please don't look at the solution. Do it independently. We will discuss and we will do it. Come on, figure out. You can definitely do it. Tell me, it's okay. Tell me the answer. Sathamash. Another 2,88,000. 2,88,000 is the number of units sold. Okay, no. Try. It's okay. Don't give up. It's okay, try. Guys, don't worry about getting the wrong answers. Here, you're not here to prove a point. You're here to learn. It's okay. Try. Not attempting is the biggest fault. Getting it wrong is not at all a problem. Try, attempt. Don't give up. Or you can just tell me the approach, how to go about with that. If anyone is ready, just let me know. Yeah. We can calculate the per unit value of material labor. For every unit of output, how many kgs of A and B respectively I need is given. Material price of A and B is also. You multiply the two, you get the material cost. Okay. Total? Come on. Total cost is? You can find out what? Total cost. How do you arrive at it? Sales minus? Sales minus profit 20%, you get what? You get the total cost, okay. Divided by? Divided by direct material labor. Okay. Okay. Excellent. Very good. Fine. So, very good. Yes. Very good, very good. Right, so you didn't see anywhere, you did it on your own. Excellent, very, very good. Right, what's your name? Padma. Okay, very good Padma. So now, so what she said was right. So what you need to do is, but again there's one assumption here, which is again the institute is silent here, but yes, that's the only assumption you can take to crack this sum. Sales figure is given, right? Less the profit, you get your total cost. From that, remove the fixed selling and distribution, right? You get the total variable costs. Right? Park it aside. Now, on a per unit level, I can calculate the raw material costs. I have the per unit kg consumption and the per kg rate. Similarly, per unit, how many hours are required and what is the rate I know, correct? I can arrive at my material cost. I can arrive at my labor cost, correct? And they have given that factory overheads are 20% on labor cost. That can also be arrived at, right? So I have the variable cost per unit, guys, correct? So the total variable cost divided by the variable cost per unit gives you the number of units. Are you clear with this? This way you need to find out. Clear with this, guys? And the assumption they have taken here is entire factory overhead is variable. That is the assumption they have taken, since it's expressed as a percentage of direct labor. Strictly speaking, factory overheads will have variable and fixed components, but here in the absence of information, this is a very fair assumption. That's the way to do it. Are you all clear with this, guys? Are you all clear with this? Yes, very good. See, it is not difficult. The thing is, it should strike, right? It's not that you don't know, it should strike. That comes by practice. Are you clear with this? Right? It's absolutely fine if you have not got it now. Don't immediately think that no, I didn't get it. No, this is not here to prove that you don't know. It's not like that. If you don't know, you learn it and now you know it. That's about it, right? Guys, yes, fine. It's better than, see, blinking here is much better than blinking in the exam hall, right? So now this question comes there, you will know how to crack it. And more so, you will never forget this, because now I made you think for a while, right? And then this moment you will be able to recollect it. Guys, are you clear with this? Are you all clear with this? Fine. This is exactly what they have done in this particular question, and out of the box calculation, right? A similar sum was there. It's like DCP, there was one sum that involved marginal costing, some circuit board sum was there, right? Marginal costing, ACP, MCP, DP, that is ideally a part of budgeting. That is a part of budgeting that involved marginal costing concept. That is right. Fine, but this sum, again, this also involves marginal costing. Variable cost, fixed cost classification is there, no? So this also involves marginal costing concept, but that sum involved contribution and all that. This was not that much technical, but it should strike. So we would be thinking on some high level thing, but it was like on a low level thing itself, it just got done with it. Are you clear with this, guys? Fine. So this is what they have done here. Look at this. Estimated sales revenue less the desired profit margin. They have arrived at the total cost. This is the total cost. From that, they have reduced the fixed selling and admin which was given. They have arrived at the total variable cost. Guys, yes, stop it there. Now, the total part is on one side, then go to the per unit column. Direct material, every unit requires 6 kgs of raw material A, and every kg of raw material B should be purchased at 160 rupees. Right? They multiply that, you get the raw material A cost. Similarly, 3 at the rate of 100, that's going to be a raw material B cost. Similar thing for labor also. 4 into 140, 2 into 70, you get these figures. And factory overheads, they have given it as 20% on labor cost. Labor cost is what? 560 plus 140, right? Find 20% of that is going to be 140. Guys, clear with this? Then the variable selling and admin is also given. Selling and distribution is also given as 60 rupees. You add it up. So the per unit variable cost is going to be how much? 2160. The total variable cost is going to be how much? 1,72,000. 1 crore 72,80,000. Divide the two, you will arrive at what? The number of units. Clear with this, guys? Clear with this? And now you get the total sales value. You already have this, right? Divided by the number of units once again. Now you get the selling price per unit. Guys, yes, done. And now you can do any other budget that you want. What have they asked? Production budget. How do you do? Sales plus closing minus opening. Just now we got the sales units. Opening and closing of finished stock are already there, right? And just go ahead and finish it off here. Budgeted sales 8,000. Add closing and minus opening. You get 8,500 is the required production. Done. The next one was what? The next one was purchase. I get it now. Okay. They had asked for material purchases budget, right? So what is? How do you do the material purchases budget? Now it stems from your production budget. I know that I need to produce how many units? 8,500 units. Every unit I'm going to produce requires 6 kgs of A and 3 kgs of B. So the total consumption requirement for this particular period of A is going to be 51,000, B is going to be 25,500, right? Plus closing stock of A and B respectively minus opening stock, you get the raw material to be purchased. This is nothing but the store's ledger control account, right? So you have this figure. So basically you have opening stock raw material, you have purchases here. This is represented by raw material consumed, right, and closing stock of raw material. In this case, you got these three figures. You had to get this figure. What do? It's a balancing figure. Raw material consumption plus closing stock minus opening stock. You get the quantity to be purchased. Are you clear with this? Yes, right, guys? And that's about this particular question as well. Please go and update your library of adjustments. Right on. Write down calculation of sales within bracket units, calculation of sales within bracket units and selling price semicolon production budget semicolon material purchase budget, production budget semicolon material purchase budget, production budget semicolon material purchase budget, right? Right, within bracket write down out of the box. It was a good sum, it was a very good sum. Out of the box, write on, it's okay, out of the box. And with that we come to the end of our RTP discussion. That was a theory question that I guess you can take care of, right? So I hope this session was useful for you all, right? Especially please preserve the library of adjustment, needs to be revisited the day before your exam. And in my opinion, question number 1 and 2 are good sums. Question number 15, 16 and 18 are also good sums. Watch out for these 5 sums for sure. These 5 are definitely a must visit. If possible, revisit once again. 1, 2, 15, 16 and 18, right? That 1, 2 were case study based MCQs. 15 was that joint product byproduct unique sum I told you. Then that service costing I told you, the BOT model, though it's a study material sum, somewhere I feel that it could come. And this question that we did right now, budget, so good sum, right? Sorry guys, and that abnormal gain also, that abnormal gain 14, huh? Okay, 14 was quite comprehensive, you put that also, right? But anything related to abnormal gain, because abnormal gain we also did it in question number 4, right? Now just open your library of adjustments, you have it with you right now, right? Now question number 10, what did we do? ABC. What was the unique adjustment there? Mass conversion, right? Now what happened in question number what happened in question number 15? Joint and byproducts, reverse working, that unique part we did, yes, and we arrived at the joint cost, and I told you that it's not a joint cost, but that is used as a basis to apportion. Can you now realize how important is this library of adjustment, right? Now one look at this, you can revise your RTP so many times, clear, right? This is what giving yourself the worth of your time, not just is you can do anytime, anywhere, whatever you are doing, whenever you are preparing something, make sure that you are, at least noting down the key learning objective from that particular question or the concept, so that tomorrow when you revisit, you know where to look in that question. You need not read the question, do the solution again. You don't have the luxury of time the day before your exam. Clear with this, guys, right? Practice this for all the papers, wherever possible. You can do it in your own methodology also. Who is going to ask you? But this is a very, very time tested and a very effective tool to especially revise the day before your exam. Clear with this, guys? So with this, I am concluding this session on RTP.